Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio. Our senior economist, Tracy Shuchart, Shy Girl. And over there in Charleston on the big screen, our senior market strategist, Jimmy Cagnina. Good morning.
Good morning, guys.
So, Besant was talking this morning on with our boy, Andrew Sorkin. Hard to listen to both of them, to be honest with you. I'm not going to lie. It's amazing how when I listen to Besant, it's like almost like reminiscent of Bernanke, like the quiver in his voice, like it creates that anxiety in me. I'm just like, dude, he's not like the most confident person, even though he's obviously, a pretty smart guy. I mean, goes without saying, but what I took from that was, number one, is they need to get somebody who's a better speaker in this position. That's the first thing. Communication is pretty important. The next thing was just doubling down, Shy. I mean, they are not veering from this path. They are staying with, this is the right thing to do.
Yeah, absolutely. I mean, he said they will make deals with some countries. The big ones being Japan, South Korea, and Taiwan, because they're talking about an LNG deal, specifically a project in Alaska, plus buying more LNG from the United States. India is also too, and so they may get some leniency as far as tariffs are concerned if they pour money into the Alaskan project and buy more LNG from the U.S. So it looks like some of these South Pacific nations are going to so far fare better than everybody else. Seems like he was pretty stayed on Europe and everybody else, and they will take it as a case-by-case basis.
So I want to get to the rumor from yesterday because it's what sparked this rally. Can you talk to us a little bit about that?
Yeah, so it said the headline was Hassett says they're considering a 90-day pause. Markets have loved that, right? What everybody wants to hear. That said, it took just a few minutes for the White House to come out and categorically deny that. So the rumor started on Twitter. I don't want to call anybody out specifically, but it was not true and denied very quickly by the White House.
It goes back to what I was saying yesterday or on Sunday night. I said the market is so desperate for a bullish headline.
For anything.
It is just unbelievable. And that little bit, and it's not a little bit of a headline, but I don't think, initially I saw it and I was like, is this like real? I mean, the market's reacted to it so quickly. I mean, and you just saw everybody pouring into it. Obviously a lot of people positioned the opposite way of that. A lot of people positioned short as we started to get that squeeze higher because I think we were almost on the lows of the day when that was happening. We were breaking down.
Yeah.
Jimmy, I want to get to you and just talk about the tape overnight. I think we're finally starting to see, some price stability come back to the market, right? I mean, we were not seeing these crazy, Sunday night opens like we saw last night, pretty, I wouldn't say muted session, but relatively speaking. Give us kind of the landscape across the board, what you saw.
Yeah, I mean, I don't know. We're up 128 points. It's a pretty big move up. And it seems to me that, overnight, going into yesterday and overnight, it seems that, and you guys just mentioned, the administration, sticking to their guns. It seems like the market's kind of accepted that now. And I think the messaging, whatever the messaging is, as long as it's solid and consistent going forward, I think the market could deal with it. Before now, it was all over the map with what the messaging is. I mean, would you rather talk to Besser or to Lutnick? Who would you rather talk to? So it just seems it seems like, though,
I'm not sure how long that guy's going to last.
Right. But I think we kind of tagged that 5,000 level on a weekly chart. There's a double bottom there back from, I believe, the August 2024. And it was really nice. I'll show it on a chart in a minute. Really nice touch point. And I think now there's some kind of comfort in that double bottom that we received. And maybe a consistent message going forward.
And we did see Europe yesterday. The market started really rallying on the fact that Europe said that they wanted to deal with the United States. That was the first time everybody thought it was going to be we were going to see an escalation and they were going to add more tariffs on top of tariffs. And so I think that also started a little bit of this kind of sigh of relief for the markets. Even though they're sticking to the trade deal, I think just hearing that there are some countries that they're going to negotiate with is, again, the market looking for anything positive at this point, kind of is buoying this market a little bit.
Yeah. One of the other things that I wrote down that I took from his... Go ahead, Jimmy.
I'm sorry. I just wanted to you could see the Nikkei is clawing back now. It's up, over 3%. The DAX is over 2.9%. Euro stock up 2.4%. So it is kind of a global phenomenon that's happening overnight and this morning.
Yeah. And two things. One is, I was talking about just like price stability in terms of the market, like the way that the market's open and the actions, you feel liquidity coming back into the books across the board. Like people aren't scared to make, bids and offers now. Like on Sunday night it was super thin. Like, I feel like this low has created some sort of, comfort, we'll call it, to where it's back to, trading more like what we're used to seeing. So I think that's actually a positive thing. I think that it doesn't mean that that's the low, or we can get into that later. But ultimately, I feel like the market yesterday's move kind of washed a lot of people,
on both sides.
And so now you come in and you see, everyone's like, okay, we made this low, we made this high intraday. Let's get back to let's really assess the market to where we are. And you can see, the market's been somewhat bid this morning. And I'm going to get to the rest of the tape too in a second. But another thing I want to talk about with Besant, which I thought was interesting, is that he mentioned how, China made the wrong move about, countering them. And he talked about how the U.S. only exports 1/5 of what they import from them. I think I'm saying that right. I think that's the number was 1/5. So he's like, basically what they're doing is not really beneficial to them at all. And they're going to continue to stay, they're doubling down, Jai.
Oh, for sure on China, absolutely. I have the actual quote. He said, I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos.
Yeah.
What do we lose by the Chinese tariffs raising on us? We export 1/5 to them of what they export to us. So it's a losing hand for them.
Exactly. And it just goes back to, Trump's team, their message is saying, stay on the path. They are not varying. And it's so funny because we are all used to a previous presidency under President Trump, him looking at the market, waiting for this tweet. It's not happening. I started getting phone calls the last couple of days as well. Everyone's like, when is he going to finally, stop
about the market?
Yeah, and I'm just like, you know what, man? That's why Besant this morning I thought was important, because if you're somebody who's long stocks or you're just sitting there long waiting for this relief tweet, I don't think it's coming, man. I mean, if anything, it's going to come from these other countries really negotiating with us, and we really see what it is. I think it comes back to, once the market knows exactly what it is, it'll figure it out. Right. You can't tell me that these people from all these companies aren't going to figure it out once they really know. The problem is they don't know right now. And I get back to like the overnight action. Silver and gold, you saw silver's right back up again. It's up 2.5%. What I think is interesting about that market is, as we've talked about here, Shai, you saw that market get really sold off, and you saw gold, you saw everything get sold off, right? Even bonds, right, which we'll talk about too in a second. We're going to get to that's my next question for Jimmy. But it just was a raise. It was a cash raise. That's the way I look at it. And again, you only know what you see, and you look at it and go, when everything is going down, everyone's going, just get me flat. Let me, and I feel like that was a lot of what we saw the last couple of days. And I think that now some people have kind of just blown out a little bit. You have a market that now is looking at it going, okay, what's really happening? Silver's back up 2.5% because there really is a supply issue there.
Right.
There is fundamentals behind it. Forget about the tariffs. Yeah, people raise some money, and people that have been waiting to buy silver got an opportunity to buy silver.
And gold too. I mean,
Gold too.
Gold's up too. I still think that is going to be kind of a cover your butt position. You know what I mean? Just in case, kind of your hedge in the markets. And so I think that, yeah, absolutely. And I think, a lot of those big banks that got margin called too, I'm sure had to get rid of, what they had to get rid of to get in line with their margin calls. And so, a lot of those banks were long, precious metals. So,
yeah. And so it goes back to a lot of this kind of, even though I don't think it was panic, we talked about this yesterday again with PAX. It was orderly, but disorderly.
Right.
It doesn't really make a lot of sense, but it does, because it wasn't like we never went limit down. It never was like throw in the towel. I mean, yeah, it got really whippy on like Sunday night was the only time I looked at it, and I'm like, man, this thing could just be 200 higher or limit down at a bar.
right.
Aside from that moment, which I think is good for the tape right now, that's behind us, because now I think that we saw that whoa moment, that wow moment. And now I think, we get back to everyone's going, okay, let's rein it in a little bit. The bond market still puzzles me though, Jimmy. It's like you got 10-year yields back up to 4.2 this morning. 30-year it's crazy that it can't really hold much of a rally. It continues to drift lower. I mean, what are your thoughts on this?
Yeah, I mean, yesterday we had the biggest jump in 10-year yield since September of 2022, right? And even today we're up 6 basis points in the 10-year. And then when you look at the 30-year bond, I mean, we broke like over 3 handles. There's only a handful of times in my life when I've seen the 30-year bonds move that much one way or the other. It was a huge sell-off, and which was startling to me, by the way. So, going back to the 10-year, though, we'll see if we kind of hover between that 4.0 and 4.2. I don't know. I think the market at this point, the interest rate market is believing the hawkish version of Jay Powell. Hey, we're going to be patient and wait, instead of CME Group's Fed funds tool, which is tracking, still four cuts between now and the end of the calendar year. So I think it's reacting more to that than anything, and it could be rates higher for longer, stickier, and I deferred to Shy, but I wouldn't be surprised to see core CPI come in well above a 3 print the next session. So that's what I think is happening here. A little bit of anticipation of interest rates too.
Shy, I mean, back to you. I mean, we make some sense of why the bond market just cannot hold a rally in this environment. I do find it to be a little bit strange.
Well, I think a lot of it is inflation expectations because of these tariffs, right? And so investors might demand higher yields for eroding purchasing prices. So we have stocks falling and the bond market falling. There's policy uncertainty. We have flight to safety kind of reversal due to this escalating trade war. We have kind of some investors selling treasuries, driving down prices and yields up. And I also think, I mean, there was a big rumor, I wanted to point this out because it's all over. There's a big rumor that it was China yesterday selling. They sold $50 billion worth of, this is not confirmed, but they sold $50 billion worth of U.S. treasuries yesterday. But again, that's not confirmed. I just wanted to bring it up because there's another rumor out there, and everybody's falling into that. China's selling all their U.S. treasuries. Oh my God,
Yeah.
But even if they did sell, I mean, they have $750 billion worth of U.S. So even if they sold 50, it's nothing. And even
it's not even 10%.
Even $750 billion, not all that much.
It isn't.
Right?
No. And it goes back to, it's like, and I should clarify, I'm not surprised that the bonds are going down. I'm surprised they're going down at the velocity that they're going down off of a market that's breaking like this in equities. That's more of what I'm surprised at. Of course, I think the bond market can go down. I understand that the underlying inflation issues are still there, and I get that with tariffs. But this is not, from what I see here, a 10-year at 4.2, a 30-year coming back, down. I don't know what the 30-year rate is right now. I don't have that up on my screen. It's not something I watch too closely, but ultimately that's not good news for sustainable bounce in the equity market is more of what I'm saying. I mean, what rates staying, I don't want to say elevated because that's not really what I mean, but they're elevated, I think, relative to the situation. And I just don't know that that's great news for equities.
Well, I mean, it could be if you're pulling money out of the bond market to put into equities, but we're not seeing signs of that yet.
Yeah. Last thing before we get to Jimmy's Edge report, is there any data today, anything to come out?
Another very quiet day. No data today. We have this whole week is very quiet data-wise. So, we do have wholesale inventories tomorrow, and of course, crude inventories, and then CPI on Thursday. But nothing today. So, it's all up to the market.
Yep. And again, good morning, chat. Busy day for us. We got Merritt coming in. I know the Order Flow Labs guys are going to be in there trolling them about VWAP. That was funny yesterday with that. And Leo the streamer, I'm sure, will be in here today for Merritt. And we have a new person coming into the network today, Jason Shapiro. We'll be talking with Jimmy today. So hit that like button, subscribe. A lot coming up here on the NinjaTrader Live Network. But first, we have to get to this morning's Edge Report with Jim Cagnina.
All right, thank you. All right, so I just wanted to really quickly show up this is a weekly chart, right? And it's continuous, not back adjusted chart. And, again, I have my rectangle in play at the bottom here. And these lows, I may have misspoke before, these lows here from April of 2024 on a weekly chart, we magically launched off it this week with the big, we had a big seller's wick underneath here, but we popped back up here right now. And we're driving up to the next area of support, which is really now resistance, right? We saw this, this was back in August 2nd of 2004. So from a weekly chart point of view, this is coming up pretty nicely. We have 134 points up on the E-mini S&P today, up 2.63%. And in an ordinary universe, that would be astonishing. But we're not living in an ordinary universe these days. Just moving into the intraday chart, let's take a look at some gamma levels from Mentor Q. I mean, we hit the put support, 0 DTE put support level perfectly, almost missed it by a couple ticks, maybe 52.50. We're trading well above JAX 1 at 5200. And then, but it's kind of a weird volume profile so far. So the dust hasn't settled on the volume profile from the session. We have a nice point of control up here around 5181, and we have a big shelf here, like a volume deficit above the top of the value area. So, this is a nice recent 30-minute candle. We rallied up to that put support, but I wouldn't be surprised if we settled back down. On the downside, we have JAX 3 really nicely framing the bottom of the conversation ever since midnight, even longer than that, at 5150. And then lower down is the JAX 2 at 5100. So we'll see if that's kind of framing the conversation for me. It's a big range, I get it, but we've been having big ranges lately. Just to check out the weekly really quickly on the NASDAQ, it's looking similar, pretty similar, right? The lows we saw back here in April, again, 2024, we kind of wicked through that, but now we're driving back up here as well on the NASDAQ. So it's similar structurally, a little weaker though from a longer term point of view, maybe not weaker from a shorter term point of view. And just to drill into some MNQ gamma levels as well. Let's take a peek. Again, systematic price action. These candles are looking a lot like the E-mini S&P, generally speaking. We hit the one-day max, though, which is another one, and the JAX 2, which is another one of those levels from Mentor Q, which I'm telling you, they're awesome levels to kind of add to your chart. That's at 18,000, give or take a couple ticks. And then JAX 1's right in the middle, pretty close to the point of control. And again, I'm going to call that, let me open this up a little bit more so we can see it, 17,800. So again, this value area is pretty good. We have a little tail on the top, I guess, or you could call it a mohawk or something. Not a lot of volume up there yet, but we'll see what happens. On the bottom, put supports at 17,600. Let's shoot over to crude really quickly here because I wanted to do the same exercise. On the weekly, it just looks, we had, support around 60. Every time this thing dips down $65, buyers brought us back up. Not not last week, right? And not this week and last week. Boom, we're way below there, trading at a 61 handle. Just driving back into the intraday, we have a really nice put support down here at $60. Nice even number. Jack's 4 at 61, Jack's 1 at 62. So those are the kind of the options numbers. Point of control right in the middle right now, right where we're trading at 61.17. And so we'll see if this volume profile becomes more of a normal, regular volume profile instead of a trend day. Let's. I think we got time to jump over to the 10-year notes. Let's do the 10-year note. Oopsie, sorry about that. 10-year note intra-day chart right now. And, trading, interesting kind of sell-off here. We have a lot of volume, though. Let's look at that volume node way up here at 112.02. And that's kind of almost a P-shaped distribution. But now we're having a little bit of volume develop right down here around 111.20. We have that one-day min. And again, these are awesome levels. One-day min, put support, previous session's low, all at the same place, 111.16. So that's a triple area of interest for me as we're kind of driving down there. I wouldn't be surprised if we tap that again today. So that's kind of the major levels here for the 10-year. It'll be interesting to see what happens with the yield. The yields right now are up over 7 basis points on the 10-year, tracking 4.216. The 30-year is about, last time I checked, 4.64% on the 30-year yield. So that's what we're looking for today, guys. That is the Edge Report.
Thanks, Jimmy. I want to talk about the collar trade, and here's my reasoning. Because the put spread was 52.90, 44.60 in SPX. Yesterday's high was 52.40-ish in SPX. We came within 50 points of that. I look at those areas now as just, check the box, take a look at those levels when we get near. Remember, initially it was 44.60 SPX. Well, not initially, it hasn't changed. It was 58.80. They sold those calls.
Right.
And then they bought the put spread 52.90, 44.60.
Right.
Okay. So 52.90 is 50 points above yesterday's high. Would not surprise me. It's funny this morning. I was like, let me see where those SPX levels are relative to ES. 50 points above yesterday's high and E-mini S&P puts us at my morning potential target of 53.80-ish. I think that, or not, that's 100 points from yesterday's high. What was I looking at? Oh, the top of that Bollinger Band at 53.40. That's what it was. So I think a high today is definitely possible, getting towards that JP Morgan collar put spread. It's just weird how, again, I look at these levels and they kind of pop in. I think if we would have kept going lower, I wouldn't have been surprised if we went to 44.60. Pharm talked about it. Pax talked about it. I think that even Tanya and other people have talked about it. And so the fact that we're coming back up now, I think the next key area I'm looking at is 53.40 and 53.80, and it comes in right at where SPX put spread is.
Right where the put spread is.
Yeah. Any other thoughts this morning, Shai, about any news that has come through over the last 24 hours? And I know there's so much of it, and again, we have you here to help make sense of it. Are we coming into today with no data? Is there anything at all that we need to be watching? So, I think that we are going to be hearing all day long about deals with countries, because the big headline was last night that 70 countries have called the White House and they want to negotiate. So my thoughts are, be on the lookout for headlines, and I'll put them on the ticker and we'll break in if we need to, if something big comes along as far as negotiations are. But I think keep an eye out for negotiations, because this is what the market wants to hear right now, right? And so I think if it's true and 70, this is, what Trump said, if it's true and 70 countries have called, then, negotiations apparently are on the table. So again, I would keep your eyes out for tariff negotiations, because these come into effect tomorrow, essentially. And so another deadline.
So we'll see what gets done today before the deadline tomorrow. Before the 10% already went into effect And then this is all the other ones on top of the global 10% come into effect tomorrow.
I want to talk about crude oil because you talked about the shale price break even was like in the low to mid 60s. We're now below that. How much of an impact does that have on crude oil prices and just market prices in general?
Well, yeah, I mean, we just dipped below 65. I mean, to be honest, you have to have like a sustained move. It's not like you dip below 65 and they just, start losing money. Essentially, you kind of have to have prices sustained below this number. But I would keep an eye out on, I know that I'm not a big, huge fan of rig count, but, watch rig counts and watch frac spreads and see what's happening in the market. Because we already had last week a lot come off, like more so than usual. So I'm keeping an eye on that. I will keep everybody abreast of that because we're going to get into real trouble production-wise if we see kind of a decline in both the frac spreads and in the rigs. So it'll be a tell of how these producers are really feeling about the market.
Talk about that just a little bit because those high yield type spreads or those types of situations when that happens have impacts on equity markets. This is not just a crude oil situation.
Well, the frac spreads are just how many crews are out there. So they just call it a frac spread, but it's how many crews are out there, not how many rigs are out there, how many are hiring crews to come out and work these wells, build new wells, etc. And so, again, that's really what I'm watching in this market right now, more so than just front month price. We've got a little bit of contango at the front end of the curve, which is not unusual for this market. We've just been in backwardation for, since the market started bouncing in, after we went negative in 2020, and those prices started to come back. We've been in backwardation for a couple of years now. And so if people remember the market before that, we always had a little bit of contango as those contracts were rolling off in front of the curve. But the back of the curve is still in backwardation, just not as steep as it once was.
Real quick, I know some people are probably like, what is backwardation and contango? Quickly go over it because I want to get onto a couple other things.
So contango is when front month prices are lower than the back months, and front month prices are lower than the back ones, and backwardation is when back month prices are lower than the front month. Now, backwardation is considered very bullish because if you invest in the back end of the curve, you expect those contracts to rise over time as they come to expiration. And obviously, hedge fund managers, people investing in oil, like to see that kind of curve to invest in.
Yeah, and something to note, everybody, the biggest players in energy are not playing the front month. They're playing spreads, they're playing options. So much of this is happening out. I know as day traders, you look solely at the front month contract, but that is like the least of their concern.
Right.
That's already kind of been baked in. They're looking at much further out. And again, like I said, most of them are trading spreads or options too. I want to talk about crypto because tomorrow we have Jim Bianco on with us.
Yes.
And I can't wait for that. Jim he talks about everything, but he talks a lot about crypto. I mean, anything in this administration right now that comes out with crypto is just a major headline. Is there anything, new on that front, what they're doing? Donnie and Don Jr. and Eric, it's pretty interesting.
Right, and Michael Saylor.
Yeah.
No, we'll get an update on crypto, and, I'd like to see, how he feels about the recent price action because it's been kind of different for Bitcoin. And he also has some really interesting views on the tariffs. So we definitely should talk to him about that and kind of differ from the rest of the voices out there. So,
yeah, 24 hours from now, everybody, Jim Bianco will be chatting with Shai and myself after Jimmy's Edge Report. Make sure you're here for that. Shai, great stuff this morning. I think we're getting ready for my boy Pharm. But before we do get into Pharm, is there anything else, like I said, as we head into the trading days, Les will be hearing from you, that we need to look at today?
So just keep your eyes on our ticker for any news that comes out, because I will be specifically paying attention to what is happening on this trade front.
Awesome. All right, Shai, thank you. Make sure that you guys are in the chat. And while you're in the chat right now, hit that like button, because we got, Pharm Navy coming on right now. And he's got, is it silver, Pharm?
It's like a grayish silver. Yeah, kind of a neutral color for this morning.
Very neutral. I wonder if that's
I used up my red to green yesterday. I said I was going to wear the green underneath yesterday morning and maybe change midway through the show, or maybe I'd wear it today. But we kind of burned that up, with yesterday's rally, I guess. So got to go gray right now.
So let's talk about that. You and I discussed if that low held, we talked about how we could see, reasonable bounce. Obviously, a headline came in, and I don't want to say it saved it, because it's always funny. Pharm, this is one of those things, I see these arguments on Twitter all the time. The technicals told me before the news came out, it was already showing a possible rally. I mean, I was bullish. I was actually long underwater, holding some calls. I'm like, oh, this could be ugly, But again, I said yesterday, it was a setup I liked, and what have you. But that news, that rumor came out, and it obviously drove price action, up. But I mean, that argument to me is always like, I hear you, but I feel like yesterday is a scenario where if that headline didn't come out, it might have been a different story today.
Yeah, I think it could have been for sure. There definitely, before that news came out, there was some buying that stepped in about 30 handles off the overnight low. And I think yesterday we talked about some of the similarities to the April low back in 2024.
Yep.
We saw an overnight low, which a lot of people ended up hating. And then cash opened. We held about 30 handles off that low, and sort of grinded higher a little bit, chopped around, ended up in a green day. Next day, came out, took out the prior day's highs. We formed that balance, 50-30s, 51-30s-ish, and then ultimately broke that to the upside. And yesterday, I mean, it opened and it was just like there was no bid, right? I mean, it was just like straight down, and that's probably when you were staring at your calls looking like this is going to be bad. And then, it sort of firmed up, and that was quite a bit before, the news hit, that they were already hitting them a little bit. So, who knows? But I mean, I hated it, honestly. I absolutely hated it, because what I was looking for was, this sort of gap down, third gap down capitulation, close in like a bullish hammer candle inside Friday's range. We talked about that. And, now you just had, that enormous upper wick. And so it's like, how the hell do you get out of that today? We've ripped here overnight, in the last hour or whatever. And like, it's still an inside day. So, that kind of frustrated me. Both because I was away from the desk when it happened, but more so from a technical perspective, it just made navigation a little bit harder. Because just imagine if you've got a bullish hammer, that's pretty easy to navigate. Once you take out the highs of that hammer, then you start, you've taken out a prior day's high, right? And you start working back through Friday's range. It just looks a little bit more clean to like at least a kind of a pure price action monkey like me. And that's kind of my background, was price action. So I would have preferred that had not happened, but it did. And it got sold hard, but buyers came in and they held and preserved that low and preserved some nice excess. And we never even retested the cash low after that. So it's a fair look.
Yeah,
it was a fair look.
Yeah, and that's why this morning in my note I said we had a tradable low and we got the bounce, but now prepare for some chop. And maybe we go to my charts and I talk about why I think that's the case for right now. And it's very similar to what you were talking about, right? It's like, okay, we had this low in the overnight, and then you have some news come in, which I didn't love it either, and it helped me, but it was if you guys would have seen the options market, it was unbelievable how wide it got. I mean, it was hard for me to even get out. I was looking at it. I'm like, where do I even put my offer? I ended up selling half of them, and then they started dropping like a rock, and I ended up almost scratching the other half, and they came off so hard. It was pretty insane. But anyway, when I look at this now, I come into today, the play was long above 40. If it held 49.40, as I said in the morning with everybody yesterday, as long as we close the first hour above it, and that's what's hard with some of the work that I do is like I have for hourly closes to happen. Once, which we did close above it, because this is an hourly chart, where the target's 51.60. Obviously, it blew right through it. And now what I see is anytime I see a low like this happen, where I see the Bollinger Bands have come in on the 60-minute boomer, Bollinger Bands, come in, and we get our 30%, 50%, and 70% lines, I box out this area. And when I see the Bollinger Bands start to look like this, it's telling me that we're just almost, we're trending up right now, right? I mean, this is a mean reversion move back within primary trend, which is now bear. And as long as we have daily closes, or not daily, hourly closes above 51.61 today, my target's 53.80. But one thing I will look at is the peak of this Bollinger Band. This is an interesting little thing that I look at, because why would I look at the peak of this Bollinger Band? Well, because on this spike of this move, after the market digested it, the highest the Bollinger Band peak could get was 53.40. Now, I look at that because it's basically, this is 20 period, 3 standard deviations. So I look at that as like, that's as far as the volatility within the Bollinger Band is telling you that the market could get in that moment. So I look at that peak and say 53.40 to 53.80, this little area right here, this is the area that I see as going to be really a resistance area. It's not necessarily a short. I would watch it after it traded it, and then if we couldn't get an hourly close above it, I would then get short and lean for an hourly close back above it. But this area to me is my target for, I think, on any sort of rallies. But why I think it gets hard is because, man, it goes back to what you said. I mean, it could be an inside day today, and you look at this low and you look at yesterday's high, both of them wicked. And when I look at them, it's hard to anticipate to buy into that high because it's a decent high, because it got pretty close to my areas anyway, relatively speaking, for today's price action. And the low is pretty decent for now, and you see the Bollinger Bands just kind of grinding higher. So I look at this as a two-way tape, probably slightly bullish, because I think that the bulls have turned the head a little bit of the bear to some mean reversion type looks. And I think 53.40 to 53.80 is the next major test for this market. And I go back to this morning, I talked with Shai about the JP Morgan collar, and I always look at, what's confirmation. 52.90 is that put spread that they put on. 50 point, I think it's like 50 point difference between yesterday's high in the SPX versus the futures. So if they were to make a 50 point higher high, which was yesterday 52.40 in SPX, that comes in at 54.90. 50 point higher high for us comes in right at around my 53.40. So I look at that and go, this area is going to be a major area of interest to me. Now, another thing I want to look at is, and I said about this yesterday, I said the NASDAQ is the market that was stronger, and it was the one that I would more lean towards if I was trading to the long side as an intraday trader. I'm not trading the NASDAQ because I'm mostly trading options, but the NASDAQ almost got its target yesterday. So now I look at the NASDAQ 18,500 to basically 17,633. That's my boxed out range. Until an hourly close below 17,663, I think we're just in grind mode towards yesterday's high. And again, NASDAQ, if you look at that Bollinger Band peak, is right on my 70% line. 18,500 is now a very important area for me for NASDAQ. So I look at the NASDAQ today that if it were to get up there and S&P were to get to 53.40 to 53.80 and struggle, I like that area as a short area for me, for sure. I would strongly look at that because there's multiple confirmations. Last thing is when I look at the Russell, so the Russell, which has been the weakest one, yesterday flipped the script, and on that rally, and this is what happens a lot of times, you get the market that's just so oversold, even though I don't totally love that. The Russell already has achieved its targets for me, so when I look at the Russell, total two-way tape. Be very cautious out there, RTY traders today. I think if anything, you're going to see some divergence in the Russell, where you might see S&P be the upside leader today. NASDAQ and Russell have already almost hit their targets. I think they're going to be a little bit of the laggers, and especially the Russell, I think, is going to be more of a two-way tape. So I'm expecting divergence within the market. And then when I look at the Dow was the weakest performer, and really not showing me a lot here. It actually just got above my neutral line. Again, why I look at this is I want to see what the indexes are doing across the board. And right now, when I look at the indexes across the board, I see a little bit of divergence, right? I don't see them all working higher. I go back to my morning note. Tradable bounce, we got it. I think that the short money has been made. I think yesterday's long money's been made. Watch for a two-way tape in S&P and NASDAQ today. Slightly bullish, but not much. And I think that, expect push and pull, man. I mean, it could easily be an inside day across the board. I don't love what I'm seeing across all the indexes. It's not super clean. It just tells me if you're a short-term trader and you're looking for confirmations, from other indexes, you're probably not going to get it. Expect a little bit of slippage on your strategy. To me, it's a position size down now, and it's a two-way tape. Last thing before I get to you, Pharm, I want to go to the 10-year. And the 10-year yield's at 4.23, Pharm. I mean, this thing is just bid on the yield, right? And it's offered in the ZN and the ZB. And I just have to think to myself, again, I said this with Shy. This is not screaming bullish to this market, right? I mean, we talked about this yesterday with Pax and Shy on how is the bond market trying to force the hand of the administration a little bit here to lighten up because rates are going up. They want rates to go down. I mean, and rates are, you heard Jim this morning, I don't know if you heard it, Cagnina say it was the largest move in yields in the 10-year, and I don't remember how long he said it was, but it's just obviously a significant move. And I said this morning, I'm not surprised that yields are going up a little bit. I'm surprised that they're going up as firmly as they are. I mean, look at the ZB chart, Pharm. I mean, they cannot hold a bounce. I mean, they have just been ripping lower. And, good on those that had sold that rally in ZB. Doesn't surprise me, for a little bit of a sell-off, but this thing is just trading very weak. It's indicating rates are going up rapidly. How's that bullish for equities? I don't see it, right? And I think you have to watch that dynamic today. It's going to be something to keep an eye on. Moral of the story, choppy tape, stay small, be smart. Keep it light and tight, man. That's what I see.
Yeah, I think so as well. And honestly, I mentioned I hated the intraday rally yesterday, and keep in mind, I'm low leverage long here. I also hate this pre-market rally. I would have preferred that we come down and I'll get to the lower time frame charts in a minute. I would have preferred that we trade lower first overnight. And I don't really like to say trap some more sellers, but give buyers a chance to accumulate at better prices than where we're at now. An inside gap up in a bearish trend, usually not the best open. I can't imagine sellers not coming in and saying, looks kind of juicy to me up here and taking a shot. And then you just, if they, win that early battle, now you've just, bagged a whole bunch more fresh longs, and that's not good. So I'm a little bit annoyed the fact, given that I am long, that we got this move, and we'll see how today goes. I definitely think two-way as long as we're inside yesterday's range. That's what inside days are, right? It's just chop, balance, range, consolidation, compression, whatever you want to say. And so I do think that is to be fully expected. In terms of ultimate upside targets, if we can find some kind of multi-day balance here and break it to the upside, so I've just got the daily chart up here, and so you can see it's an inside day. You can see that large upper wick yesterday, whereas if this is just a hammer candle closing somewhere inside Friday's range, then this has a little bit more potential, I think, to run than on an inside day. But in terms of upside targets, you mentioned 5380, also 5330s, 5340s. So you've got an RTH gap, so regular trading hours gap, right, between Thursday and Friday. This is all hours charts, but we gap down Thursday into Friday, and that gap probably acts as resistance, at least first touch. We're going to have to see how it behaves, and that's right around at your 53 5340-ish area is where that comes in. And then 5380, for me, 5375 to 5410-ish was a spot that we talked about a couple of weeks on the way down as being, really quite important to hold. And obviously we didn't. We just gapped right below it. And so big picture, that's an important spot to me. But really, I mean, if the rally can get legs, and I'm not ready to say that it's going to just yet, especially given we're still an inside day, right? We still have not taken out prior day's high. But I mean, if the rally can get going, like sure, there's like big picture levels, high time frame areas. They were completely disrespected on the way down. So I'm not going to assume that they will be respected on the way back up. And we don't get into any meaningful supply until way back up here, right? 5500s. So, if we get some decent news after consolidation, there could be some legs, and there's going to be some bears that want to lean back in and short this, right away. And I would say if we do get a multi-day consolidation here before a reversal, then it's probably more likely to be durable. And that's why I would have liked to see us trade lower, consolidate, maybe today inside day, and then tomorrow tries to find a way to break yesterday's high. If we just rip out of here, I think it'll probably in the end be a little bit more brittle of a rally. It doesn't mean it can't have crazy legs, right? We've seen these markets get nuts, in some of these bearish trends. But I would prefer to see more meaningful accumulation off of a low than a couple of hours that we got yesterday of cash hours, and then it just lifted. So big picture, kind of what I'm looking at there. Let's see if there's anything to note here. Here was the I think this was the China news gap, wasn't it? But between Thursday and Friday, you had that big gap. And so that is going to act as resistance right around this 5330s, 5340s area. And if I slide the profile over, you can see it's how thin it is right here. We just kind of buttered through there on the first of however many China retaliations that we've got. So that's going to be a tricky spot at first. We could come up here and test it and then form some kind of big range down here before making an attempt to rally up towards that 53.75, 54.10-ish spot. Big picture. So that's kind of what I'm looking at. I would have, I would have preferred, because we opened the overnight session and we never even traded a tick below the 5-minute opening range low. And that's a little hack that I look for in terms of assessing a given session. And so, NASDAQ actually didn't even touch its 5 p.m. close. And same thing, no interest below its 5-minute opening range low. So it's pretty much been uppies all night. And I would have preferred that we trade a little bit lower first, fill in some more of this volume, and then get some lift. So, we'll see if this can sustain, because, if sellers wake up on the wrong side of this, then they have to cover. It can just go. But I feel like maybe it's a less durable bounce if we just kind of rip out of here.
Yeah, when you look at the market profile or the volume profile, I should say, it's the way that they're building. I go back one chart, Pharm. I wanted to see something here on the bigger picture one. Go back maybe one. Yeah, right here. Yeah, when I look at this, it's like, and this is what time frame is this?
This is this week's developing profile right here. So starting Sunday night.
This week's. Yeah,
week.
I mean.
Yeah.
It really goes back to confirming why I think that we're probably going to be a two-way tape. I mean, I feel like they're just building out this volume profile down here. But like you said, if it starts to get legs up top, could get weird. You kind of wonder, and that's why a lot of times when I talked about like the 5340 to 5380 area, I have to watch how it trades there before I decide to get short, because it's not one of those things where if it just gets to that price area, I would just definitely step in. And I think that volume profile supports that for me. Again, I trade on a little bit of a wider time frame than everybody else. Some people would be in the minute it hits a price area. For me, if anything, I'll leg my way in. And I just think that when I look at something like this chart, like you said, the mid 5500s, when we slice through the low 55,000s like butter, and who's to say that we don't do that on the way back up? It gets kind of interesting if that 5340 to 5380 doesn't hold. I mean, it's 100 and something to 200 point move. Again, higher, could it happen? Sure. And so, again, validating to me why I think we should probably spend some time here, right? I mean, are we ready to go all the way back up? Who knows? I mean, I just wanted to kind of make a comment on that.
Yeah, that's where I'm at because, I mean, again, so first of all, we had, the low, right now, which, by the way, we're calling it the low main low. I don't know if you saw my post on X after we tagged that 48.30 spot that I had. I said I was going to eat a whole bunch. I was going to break my diet and eat a whole bunch of Chinese food to try to support these markets. And so the guys in the room are calling it the low main low because I had some spicy lo mein and some General Tso's. I haven't had a carb in I don't know how long. So it worked. We saved the day, Deli. So Bulls, you're very welcome. I splurged for a couple of days and we sort of save this. It had nothing to do with the fact that it was a partial back test of a 3-year breakout. It was the Chinese food. Okay. But yeah, I mean, to me, the low was after hours, which again, I'm okay with in certain situations. But then again, the fact that, cash hours didn't really consolidate a whole lot. It just felt like some eager buying. And, if you really think that, I said this for one of the other after hours lowers, if you think that, Refugio at the Hawaii desk is, buying bottom on this or something like that, probably not the case that he's the only one accumulating these lows. So I would just really rather fill this out a little bit more, give buyers, if this is going to be a durable low, give buyers more of a chance to load up on some volume so that they're willing to initiate higher, drive this thing higher, get some payoff. I don't really love this float up. And I think the squeezier it gets on the way up with, if there's, we're leaving behind thin structure on the way back up, I'm probably going to be looking to step on it at some point. But like you said, just, pick a level and then layer in because, if shorts are covering, you're just going to get run over. I mean, if shorts are getting squeezed and you're trying to lean into short, then you got to wait until they blow out first, or you see some kind of huge volume come in and just eat that squeeze. And so, we'll see. I really would prefer we trade lower first. And so, bringing us into, coming in today, we have, a nice looking profile for the overnight. Again, we're trying to basically break away from yesterday's volume. And that's what he says. So here's yesterday's volume. I would have preferred that we at least come in here. And honestly, I would have preferred to come, back down at least to like the 50, 50s, 50, 60s, maybe to consolidate before trying to break away from this volume. But here we are. And so we play it. So, I mean, as long as we're, basing, you can see if you're just a support and resistance trader, you can clearly see this area here. That would be, good for bulls to hold. If we get this move, it's still an inside day. We get sucked back below here. Then it starts to look gross really fast. And all of a sudden we're not talking about upside targets. We're talking about downside targets when, really it's just part of a broader balance, sustain this breakaway. And especially now sustain this latest breakaway, then perhaps we can see some lift. But I mean, you have to have new and willing. I mean, aside from shorts covering and shorts getting squeezed, I mean, at some point you're going to need buyers that wake up and they're like, hey, bummer, I missed the low 400 handles ago. I think this is a good time to buy. The same people that were selling it on the way down, thinking it was going to zero, have to suddenly wake up and decide that they're going to initiate on the long side to take this thing higher. So it's kind of an awkward spot with an inside gap up. I absolutely hate them when I'm bullish.
Yeah, no doubt. And again, it's one of those things where we come in today versus where we've been. We feel pretty good about the low. The high is also not so bad. We come in and it's like it might be a day where the market just builds out the profile, right? Talking more on your language. And when I look at my stuff, I feel the same way. When I see divergence in the indexes, when I see, we've hit my targets in NASDAQ and Russell's above it and Russell can't, or the Dow can't really catch up. And then the S&P is like almost there. It's like, yeah, it's the momentum in the very, very short term is still a little bit to the bullish side, but again, the bear can potentially rear its head out at any point in time, and I think you're going to have this push and pull tape today. I really do see that. The best scenario would be like a ripper higher, get into some resistance levels that we're all looking at, and you start to pull back in, and the response is good, and then you have a fall back down, and then they spend some time. But again, it's a day I think to be really, really small and smart and be patient, and let's see how this day unfolds. It's about that time, Pharm, where we start to look into what your morning plan is. Let's go over that.
Yeah, so I mean, I'm trying to keep in mind the big picture here, and we talked about these same levels a week ago on the way down. If 5185 is holding, let's call it, I'm calling it like 5185, 5200 is holding, then we get retests of that 5240, 5250, which I talked about last week was last year's volume point of control is basically right here. Above there, big picture, I'm keeping in mind we can retest 5375 to 5400s. And so, I'm certainly wary of being short above here, but keep in mind that's big picture. It can play out over days or weeks or what have you. So to me, if we come up and let's say we sweep yesterday's high and reverse back into yesterday's range, we've got, relatively light volume overnight. We could come all the way back down and at least, test these 5180. So like maybe I'll look for a short, and I probably actually will look for a short because I'm long on a swing basis. And so that's what I like to do. I call it hedging the edge, right? So I may look to take a short in a situation like that to hedge my long exposure, because then, if I get my core short position taken off, let's say, here back in 5180, 5200, then I can leave a small runner on. And that way I don't feel like an idiot if we just kind of rug pull and I'm long and maybe I didn't take enough profit up here or something like that on the long side. So I might look for something like that. On the flip side, something we've talked about before is when bearish setups don't produce bearish results, we have to pay attention. So a bearish setup would be, just sort of sweeping yesterday's high, reversing back in range, that has potential to get sucked all the way back into yesterday's range. So, if that happens and then all we do is just kind of hold right here again, then that's a pretty good look for buyers, putting up a defense. And to me, that would be a notable change in character, because clearly over the last week or so, especially, you didn't even need a bearish setup. It was just always bearish results. So that would be something that would be notable if we did get that potential bearish setup and it just didn't yield any kind of results. If we do get trapped back below, again, you just take these cluster of lows on your charts, but you call it 5150s is what I was looking at. If we're offering that from below, I'm short, at least coming back down to what was Friday's low effectively. And that's going to be a key spot to hold. We're going to need to remain sticky in Friday's range in order for this to have upside. So, I probably, if we come back down right now and retest this area of consolidation, I'm probably not going to look to long it personally, like right at the open. I don't often trade the open unless it's like a really, really good setup, but something like that could work if we just end up leaving sort of this low volume node here and consolidate in this range up here. You can take two-way trades, longs here, short here, type of rotational trades. And then similar can occur in between kind of this 5150 to 60 on the lower edge and 5180s. If we get sucked back in here, give back this move, then it's pretty fair to expect a rotation all the way down here, since all these people would be trapped offside. So yeah, early moves, rotation here, and then looking for a potential reversal off of a fail. If we do just continue through yesterday's high, then I'm sort of hands off on the sell button, and see what happens up there at those 5330s, 5340s. I would just be taking some profits on longs, maybe adding some short hedges out for me. So this, again, this sort of puts me in a tough spot in terms of trades that I want to take right at the open. I would have preferred that we trade lower. So 5180s, let's call it 5150s as sort of key areas to be looking at. And then, yesterday's high is going to be a big test. And I just don't know that we want to test it yet, to be honest, but we'll see. I guess maybe they break it and they just go and they never look back. Deli, maybe.
Yep. And we have the guy today who coined the phrase, "My edge is on the edges," Merritt Black. And I think today that really holds true for what I'm looking at. I mean, trading in the middle of this tape today, very, very choppy, I think. I mean, yeah, and I've stated all my reasons why. I love to see a rally up there, hold on some resistance, and then enter a short, or pull back down, like you said, to some of those key levels and see them on near some support areas and step in. But trading this middle, don't overtrade this tape, everybody. You heard it from me, Pharm, Jimmy, Cagnina, everybody this morning. Small and smart. That's all I could tell you. You know, God forbid we have a day of digestion. We'll see, though. Who knows? His tape is always surprising us. Pharm, thank you so much. Again, we will do this every day, Monday through Thursday, from what is it, 8:30 and change to almost 9, right before Tanya. We've got Pharm's Navy. Hit that like button for my boy Pharm, who brings it every day and gives us a perspective that unlike any other going into this weekend, into the Masters. So thank you, my brother. I appreciate you as always.
Have a good day, Dally. We'll see you.
All right, everybody. Next up, we have Tanya Trades. Good morning, Tanya. Great stream yesterday.
Good morning. Good morning. Yeah, crazy day. I mean, I definitely think that was the largest daily range I've ever seen in my trading career so far. But yeah, it was a good session yesterday. And today, you know, interesting open here. And I think I have pretty similar view to you guys, I think, with how we're opening up in the charts. That was pretty, yeah, it was pretty insane how we had that like little sell side swept and then we just completely I mean, I heard it was some false news, some false tweet about tariffs potentially ending that really caused that surge, which was insane. And then we found that reversal there, right? But what I'm paying attention to is this like opening where we opened at 6 p.m. We basically tapped into it during Asia and just like by a couple ticks. I think Pharm even mentioned that. And we held it up, and then we're on the 15-minute or on the hourly, actually we displaced above. I don't really love the range that we're working with today. I think it could be very much like a seek and destroy both sides of the tape type of action after we had yesterday, like such a huge range yesterday. It would be healthier to digest today, I would think. So I have that marked out as a potential area. So like we could retrace back into here. If we start seeing our bearish shifts down, I would target this area, I would think. We do have a little bit of a divergence yesterday where NASDAQ took those pre-market highs from, what was that, like Friday? Yeah, Friday. And ES fell short of that. So, you know, it depends. I also have like, I'm going to look at previous day high for ES. If we start getting above there, you know, we could reach up higher again into this area and dig up further. But I would prefer more digestion, honestly. And we did like leave a bunch of equal lows even yesterday from the morning session for now, but we displaced above that. So it depends on if I'm going to also look at this hourly FEG we left. And if we start, you know, displacing and closing below it, then I'm definitely going to look for more downside. It's a tricky situation when you're coming up into a wick area. It's just such a huge wick, and there's not really much for me to look at like as a good point of interest there. So I don't really love what I have to work with today. And I'm also keeping note of the fact that CPI is this Thursday. So given yesterday's really large range, we could have an inside day today. And also like I don't think we have any orange or red folder news today, right? We don't have anything during the day. So we could just be digesting today, back and forth. Honestly, I wouldn't be too surprised if we do that. So I'm coming in kind of neutral today. Again, I kind of have a feeling that we had such a large range yesterday. I wouldn't be surprised if we just stay within yesterday's range, which would make sense. It's highly likely actually, because it's just such a humongous range. And we're staying above that gap up and in the upper half of the wick. Like we could just digest here for like coming days. And for CPI. So let's see here. So basically I have to just go on the smaller time frames and trade that. So if we lose that gap up, then I would probably go for a bit lower. I would try to go for those equal lows we left during the session here. If we close below this, then we could definitely go for this low. Go for this low first. That's 7,400. And then, we left a bunch of equal lows here. So we'll see if that was actually the tradable low we had. We bounced out of a pretty good area here yesterday. And then, the move has been sustained, although it's been just like kind of a slow grind up. I don't think it's the low personally, but basically I'm just gonna stay nimble today. I'm not really gonna be a hero today, I don't think. And I really need more confirmation today, just because it's very difficult when we're starting up in the higher part of this wick. I need to see, from downside, I would need at least this 15-minute to get on the 15 for us to close below this. And then I would try, for the bearish stance, I would want us to close at least below this. And then I would go for this gap from 6 p.m. open. That's the easiest hanging fruit, I would think, because we kind of have these equal lows and we paused right there last night. So that's a liquidity pool I see. But other than that, I don't really have much of a bias coming into today. And I think that we could go back and forth and kind of destroy some people's short-term option contracts. I think, that's what I think about, especially yesterday after that huge move. And then I think I was trying for a little bit lower to got first targets taken, and then stopped in profit or break even. And if that happens a couple of times, I'm like, okay, now that just means that we're kind of having this back and forth tape. We did basically have that for the rest of the day yesterday. And now we're just grinding slowly up. It's not really so enticing to me. So that's all I'll be looking at today, I think. Mark this out. We'll see if this holds up on ES as well. If not, then I'd probably go for this little gap from the Sunday, from today's 6 p.m. open. We also, we just ticked into it at like around 9:15 last night, and then it broke the high again, and it was a kind of consolidation back and forth during Asia. So
A question for you, between ES and NQ coming into today, does any one, because I know you trade both of them, does either one of them look more enticing? Is there something that one of them is showing that is leading you to trade more one over the other? Because I think a lot of traders are trading ES and NQ, and they come in and they maybe don't know which one to trade, and then maybe they randomly come in and just pick it. A lot of what you're doing is always in your preparation, and you'll look at one versus the other coming into the day. So is there any lead on either one of those that maybe would, tip your hand to trade over the other today?
That's a pretty good question. So let's see here. They're up pretty much the same amount overnight. I mean, the Nasdaq's up about 2.7%, and ES is up 2.8 actually, which is interesting. ES, I think as it's more likely that ES will take yesterday's high than Nasdaq. It's closer to it, and also that high did not take out these pre-market highs like Nasdaq did. So that could be like a catch-up play, as we are actually going towards that area right now. But other than that, they're pretty similar. I mean, even yet, like I think their structures are pretty much almost exactly the same recently. See, it's just slightly yesterday, ES was a little bit weaker, but still held up this area quite well and never closed below this. And then we had that humongous surge up. It was crazy. And then yeah, they look quite similar. I always look at which one is up more of a percentage. So I think the Nasdaq all typically moves faster and larger distances, and I think it's really interesting today that ES is actually up slightly more than the Nasdaq. It's up by 2.9%, and the Nasdaq's like up 2.75. And you could see structurally it is closer to its yesterday's high. It's about 44 44 points away. The Nasdaq's about 300 points away. So relatively it's like 20 points on ES, like 100 on Nasdaq in my mind. So it is a lot. It is closer. So yeah, I think that I think you're good with going with either one of them today. Honestly, they're moving pretty much in tandem recently, and I think that I'm pretty neutral today. I don't really have much of a bias. Yeah, we have a humongous range from yesterday. I think it's possible I'd be watching ES's high. We could hit yesterday's high on ES and then not do it on NQ, and then potentially form a divergence there if I were to go to look for shorts later on. That's something I would probably keep in mind. I always look at if there's a divergence at a high. So if ES hits yesterday's high around like 52.88s, then I'll definitely have an alert there and be watching if NQ's up there are struggling and potential reversal there. But other than that, yeah, I think it could be also two-way tape similar to what you guys were saying earlier with Pharm. Just from the sheer range from yesterday and the fact that CPI is on Thursday, we could just have a little bit more digestion, a little bit smaller movement. But we'll see, because anything can happen in today's tape. I think it's pretty unprecedented. You never know what fake news is going to hit the headlines and then cause a 1,000-point surge in the Nasdaq. It's kind of crazy, but I think we really read that well yesterday. But yeah, I think Today I'll be more careful than usual, because yesterday is just such a large range to be dealing with.
And it's so funny how all of us are saying, oh, price action's tamed a little bit. We're, maybe, we see a little bit of a digestion. You have a 140-point range overnight in the S&P. It's hilarious. We're looking at that going, whew, wow, things are pretty, lighter. With the range of the NASDAQ overnight is, what is it? It's 500-ish or close to 500, 450.
Yeah.
It's funny. But I think the key, again, the key things I take away from you this morning, again, is that, and it's very similar in what we were thinking with Pharm and I, is the S&P is the stronger one today. Wait to see what happens on the edges. And I like how you talk about this too, Tanya. When they're up about the same, you're saying there's no real edge there, but watch the divergence potentially at the highs. That could be a signal for, what follows that today if the S&P were to do it. The NASDAQ's much further. You didn't really say it, but you indicated it too. When you have the S&Ps a touch stronger, you typically are going to trade the one where you're going to trade the one to the long side that's stronger. But when they're up about the same, I guess it doesn't really matter. But again, just important points for people to understand. This starts with preparation and what you're looking at, and that leads into what we saw yesterday from you, which is good execution. Know what you're looking at before you get in there, everybody. It's too busy to not know exactly what you're looking for scenario-wise or what market you're going to trade. don't fly by the seat of your seat of your pants in this market, because it'll take your pants. It'll take your shorts. We used to say that, it'll take your shorts. Anyway, a lot of fun with you as usual, Tanya. Monday through Thursday, you were on with us from 9 to 9:15. I can't thank you enough for joining us today, and enjoy the rest of the day in your stream.
Thank you. Have a great one, everybody.
All right. Well, the time has come. First of all, hit that like button for Tanya. She's such a trooper. Every single day comes in, gives us her prep, and I really enjoy our conversations. Hit that like button for Tanya. And now the time has come to bring in our boy, Merritt.
Give me them pants.
Let's see if we got the man. There he is. Oh, we used to be like, you traded too hard, and they're going to take you, rip your shirt and your shorts right off with you.
Hand them over.
Here we go, Merritt. The poll's already starting. Here he goes. It says, is it VWAP or VWAP? Vote into the poll. This is very important stuff, everybody, because it's going to tell how much Merritt gets trolled this morning by the Order Flow Labs crews. They're going to be in your chat all morning, man. I'm just letting you know. These guys.
I love it. I'll have to pull it up now. Yeah, that's a great question.
So if you guys
do we
don't know,
spell it right or do we spell it wrong? What do you think, guys? I don't know. 72%. These OFL guys are getting crushed. 73. Keep it going. Keep it going, guys. Just crush them. Just bury them. Bury them.
do you not? Leo's a streamer now, man. I mean, that's also something that came out of yesterday's stream. You coming into their stream
Streamer
yesterday,
boy.
it's opened up all sorts of different things.
BOI, streamer boy. Yeah. It's too good.
It's too good. It really is. So you heard all of us this morning, Merritt. First of all, banger trade yesterday too, bro. Killed it.
Slightly. Yeah. Thank you.
Yeah. And again, we talk about it, and here in the morning, we're all about preparation. And, people don't know how much, they do kind of know, but how much time and effort you put into preparation, knowing what you're looking for. It's so important. And, we'll just talk just briefly about that before we get into your charts. But it's like, how much of your success has come from your morning prep?
It's integral, man. And I'll one up that. How much success as a trader comes from everything you do outside of the moments of clicking buttons. That's where all the success comes from. So it's no different than an athlete at the highest levels. It's the same thing, man. The prep, the review work. All that stuff is what makes success even possible.
Yeah, no, 100%. And so not as busy as an overnight as the prior night, but we'll take a look at Merritt's charts when we get a chance, everybody, to pull those up. I know it's kind of crazy. The Sunday night open was just wild, man. I tell you what, I opened up that chart on Sunday night. So I had my nephew with me. I was at...
Yeah.
I had to take him to Jimmy John's before we went to the airport.
Nice.
Right, I'm running to him, getting him a sandwich, and
Little Italian nightclub,
and he's like,
extra
"Why are you
nightclub."
looking at your?" He's like, "Give me a salami," and he's like, "I want the real big one." I'm like, "Dude, you're going on a plane. My brother is gonna kill me if I give you an extra long sub right now. It's not gonna happen." So, and I'm looking at my phone, and I'm just like, I was looking, and I ended up pulling up the book, and I was like, "What is going on?" And I expected a busy open on Sunday night, but I was like, okay. This is just kind of wild. It was like I was flickering 20, 30 points in the S&P. I'm like, maybe I got to – and I was kind of looking forward to see what was going to happen on Sunday night. And I'm like, you know what? Let me just wait and see what happens Monday morning. That was pretty wild, wasn't it?
It's a wild time for us. Dinner time here is 5:30 with the young kids. So I told the wife, usually I'm not at the screen at the exchange open on Sunday evenings. That's not typically something I do. But I told the wife, I said, I got a feeling here. This is just too wild. I have to be there. And I start watching it. And me, I'm kind of balls to the wall kind of guy, like aggressive, like get in there, do it. You know, PAX is Capital Preservation Friday. I'm Capital Appreciation Friday. You know, that's just some good stuff. I put out a tweet that said, like, essentially, like, guys, there's really good high vol environments, and then there's this, and this is the latter. This is like, you do not want to touch this. Now, you know, a couple hours in, it settles down, and I think it became tradable, and I traded it a bit. I'm going to come
I
out
did
of this
too.
trade. Anyways, we'll keep talking. I'll keep my eye on it. And then it was really just that initial open. It was kind of like a mini crash. It was that wild.
Yeah, it was. And I agree with you. After a few hours in, it became tradable again. Initially, I looked at it. I was like, dude, I'm like, is this thing going to go limit down in like 1 bar or
Yeah.
200 higher? I was thinking to
Yeah.
myself what I was thinking was, and it was funny, is my brother, he used to trade in the floor with us, or he was a clerk for me. And he's like, what's going on? I'm like, listen, man, I'm just waiting for a Trump tweet now, because when I saw that, I'm going, we're either going to probably go limit down, or he's going to come out and like, they're going to try and calm markets. I'm actually surprised that neither happened.
Yeah.
You know, because we couldn't go limit. I think Russell did. And then even, you know, nothing really came out from the administration at all. They have been staying airtight with trying to just
It's
stay
been
there,
actually been
you know,
impressive. Yeah.
hold.
That's,
It's been impressive. So pretty interesting that neither of that happened. And then again, you know what, yesterday I thought was one of my better trading days for a while. I mean, I was long calls on that ripper in the morning, and I'm like, again, this is why I like options, and I can't wait for us to get options on Ninja, because I'm very curious to see how I will look forward to showing you and everybody on here some of the stuff that I do, because it's like I would have never been able to hold that long. I started getting long calls when we were at just above 49, like 60. And I'm like, these things are just I was getting buried on them. And then that headline comes out, and, you know, next thing you know, it's like, and it was even hard for me to get out of those because the options market was so wide. And I got to talk to my boy Jimmy Jude and Chris City. I need some help on understanding. It was like, as much as we rallied, my options rallied, but not nearly as
so
much.
what'd
We
you
could
do?
have that
Just start
conversation
like
a different day, but
midpointing
was
it, or like what?
That's what I was midpointing it, and even then I wasn't getting hit. And I'm talking on one
Damn.
lots in S&P. I was like, the next thing you know, I was
Dang.
getting filled on a couple here, and I was like, okay. But anyway, it was just it was an incredible move, and I think that takes us to today. After what you saw yesterday, what is the charts telling you coming into today like today?
Today gave me the first, what I call, contextual shift. Did I say today? I meant yesterday. Yesterday gave us what would be, and really into the overnight session tonight, this past night, I'm sorry, I can't talk here, gave an actual contextual shift to where one of the 4 or 5 timeframes that we keep up with, you know, NADRO type tools, the monthly, has actually gone from full on bear mode to more of a shift to rotational, which is a bullish event for the time being, until we're, you know, the NASDAQ is up into almost, you know, call it 19.5. So it's some of the time frames are beginning to change. Something like a daily bar chart is just extremely extended with room to get up to test some areas above. So, you know, I'm long here as we speak, as we see. I did not take a short yesterday. It was all longs. Yesterday was the best day of my career. And I'm leaning bullish. I really am.
Yesterday was the best day of your career. That's cool.
Brother, I took out 94% of the daily range yesterday with my entry to exit. And yesterday had a
I saw that.
range.
I just, you know.
Yeah.
That's great. And you know what? I'm going to tell, now that I know that, it's interesting because psychologically, after you have the best day of your career, to come in
Yes,
the
let's
next day
talk.
and get regrouped, what's been, let go over that. This is important.
This is extremely important, and it's one of the few things. All right, if they do keep pressing this, I am going to come out of this, because this is, you know, it's a nice, decent move up here. And yeah. All right, so I'm flat, so we can talk. one of the few things that's been on my mind as I went to bed last night, as I was getting ready this morning, I have a feeling of risk aversion right now. And this is my natural tendency. And I think it's important for all of you at home to figure out your psychological wiring around this. When I tend to get up, I tend to lose my appetite for risk. I tend to kind of, I don't know how to say it, kind of like feel like I want to get safe, versus like try to really keep pressing. So for me to try to keep pressing, it's something that I preach and it's something that I do now, but it does not come naturally to me. And so when I have a big windfall day, that like I actually had to take a break yesterday after that trade. And that is very, very rare for me to actually have a visceral, like emotional response to something that happened trading these days. Yes, sometimes if I'm having a really rough patch, I'll get a little triggered, a little tilty. I'll take a break. I'll do that. But after one trade, to break, to know myself that I needed to step away, and almost almost lingering a little bit in me into today. I'm just being honest here. I'm not perfect. A lot of people think that I'm some kind of Zen master, Yoda kind of guy, but I experience the emotions just like anybody else. The thing that I might do better than the average bloke is accept it, what's going on internally, and then put all my energy and effort into making good decisions despite what's going on inside me. My process is a better trader than I am, right? So that's where I'm at. I understand that one thing I recommend people to do typically is each day before you trade, are you underconfident? You've been getting a little beat up? You need to know that. You need to realize that, and you need to understand that the implications could be negative for your actions for today based on that. Or are you potentially overconfident? You can trade just as bad being overconfident as you can underconfident. So in trading, we're always trying to get back to a nice balance, a nice kind of middle sweet spot in terms of confidence, risk taking, all those kind of things. So that's where I'm at today. I am having to tell myself it's just another day. Doesn't matter what happened yesterday. I'm really not fixated on the P&L. It was just there was just something about it. It was kind of like a career defining kind of moment for me yesterday. And I got to get back to business. So that's where I'm at.
Yeah, no, and this is a conversation I think we maybe have at a different time with like a Jared Tendler, and I think this is such an interesting thing because you're probably a lot of you out there may be experiencing something similar with Merritt as you get these busy markets. Some people are going to have their best days, some people are going to have their worst days, and there is an emotional
Right.
toll that does carry over. And my man Merritt, he's been through it, and I look forward to watching you this morning. I'm going to step out of the way here and watch you trade this morning. But again, I say congratulations, but you and I both know as a trader, it's like we only feel as good as our next trade. But I say that just as a brother, as a friend to you. It's like it's great to see it, and your growth is just phenomenal, and I love it. And I hope I always wish nothing but the best for you. And yeah, I'm excited for you and where you are in your career, and I'm excited for today's stream. So. I will let you
Let's get
take
to
it
work.
from here. Hand the keys over to you, my bro, and I will be watching you.
All right, man.
I'll see you. Cheers.
See you, brother. All right. So obviously this is the type of trade that I like to take here. So I was long coming into the stream. That's right, JW. It's just us now. Time to misbehave. And so look, this market, you've seen a couple people this morning talk about maybe a digestion type day, maybe some two-way trade, that type thing. I don't see that as much. As I mentioned, I am bullish. Not that anybody's right or wrong. Everyone does their own analysis and has their own views, and you have to trust it and live by it. Live and die by it, actually, is what we say. Live and die by your prep. Crudele asked about prep. You want to live and die by your own prep, not what comes across on Twitter, not what someone else says. That you can take pieces of information. Here we go into the opening bell. You can take pieces of information in, but you got to filter it through your process. So for me, pre-market trade, being long from here, getting extended, having a nice upward move, it was kind of enough, and the odds of some form of a pullback were high, and so it started to turn a bit there, and I came out of the trade. It's a good trade. It was just a scalp. I'm not trying to get in anything from that and hold it all day or anything, despite being bullish. I do think that where I exited yesterday at those highs is just as someone is saying in the chat here. I agree. For me, it's 18. It's not yesterday's high. Remember, this will be, I'll repeat this. It's not yesterday's high. Nadro folks had 18,279 as a important level since the Sunday open. So, there's a little box drawn here on this weekly chart here, and that's important. And that's where I flattened out of that trade yesterday. And so that's important as we kind of head towards testing that today. The issue is that, look, trade location matters. Where are you trading or potentially trading or not trading? So we'll just say, where are we? Where is a market relative to your contextual way of viewing market opportunity? I'm not talking about setups or entries or short-term stuff, guys. I'm talking about higher time frame context. Where are we contextually? Right? So someone spouting it out in the chat there. I only trade the edges, right? That's, my phrase is, my edge comes from the edges. So when I'm getting long yesterday, and I'm not trying to pat myself on the back about yesterday, it's just the most kind of recent trade, or heck, even this trade here, it's a similar concept where you have a distribution, a balance area that forms, we break it, you come back and kind of retest the edge of it in a sense, right? That was a place for me to put on risk. And so, trading from the lower edge of a balance like yesterday, what was my exit on the trade? It was the lower edge of this balance from last week, right? So it's just repeatable, it's fractal. But anyways, back to the main point. I'm a little scatterbrained. Knowing where you are contextually is key. Right now, at the hard right edge, where we are contextually, is not a compelling place to trade. Even where I took this scalp long right here, as I said, I had good logic for the trade. It meets my standards for a trade, but it was not a place where contextually I want risk on that's worth really holding and really being aggressive with and things like that. I think, look, I think the Omega Speedmaster is a staple in a collection. I do. Yeah, it's not some, super. Look, people who are into watches for the flashiness of them are the worst type of watch people. Speedmaster is a historic, worn on the moon type of just fantastic piece, and it's Speedmasters are cool. You're getting a respect from a true watch guy for wearing a Speedmaster. It's a great watch. All right, so what do we think about the short term right here, right now? Well, quite frankly, not much. Sideways since the pit open. Pit open was about right here. So just up, down, up. Order flow has gone choppy since the open. There's really nothing happening. To me, I think the market's in a spot where it could pull back to find buyers to continue to go higher. I've been joking recently about the tweet I put out the other day about what it was like a cheeky like low of the year just got put in. Nice, right? Tongue in cheek. It's it's a joke. That tweet got 10 times more views and stuff than anything that I put out. It's insane to me. I don't understand it. I do not know what the people want or what the people like. I'm too far on the spectrum. Now, I think we need to pull in. Is it a shortable opportunity? Not for me. Not for me. I know we took out technically the overnight high. That was not something that was difficult to do. For me, the overnight high is not at a location contextually that's important. Not all overnight highs and overnight lows are created equal. Not all ascending wedges or whatever pattern you like are created equal. Context matters. What's the context of where this ascending wedge is created? So sellers taking control of the tape here. If it's going to be a really quiet market, I could continue to get long by pullbacks. I have to see something short term, though, to get involved. I don't hate that short fly eye there. Like I was saying, it's expectation is pullback first, so you're a part of the pullback. I would not overstay my welcome in it, but anything can happen. You right there, I just gave somebody like a piece of information while they're trading. They should probably disregard it, right? Get to stick with your process. Manage this short according to how your system is designed to do. Don't listen to me. I like those older white dial explorers. I like those a lot. Nice arc. Cosperone says, Merritt, sir, what are you thinking in your silence? I love that question. I was reading the chat talking about watches. That's what I was doing. I'm not stalking anything here. I'm sorry, I'm not as good of a streamer as Leo. Oh, so let me address this question here. Any particular reason you use the 1500 volume? Please hear this out, guys. It doesn't matter. Well, it matters. We'll get to that. It doesn't matter what number of minute bar you use, number of tick bar you use, number of contracts traded volume bar you use. It does not matter. There is nothing superior about one over another. The question is, for your full kit and caboodle of trading, and hopefully it should involve some use of multiple timeframes, what makes sense? What are you trying to see? What are you trying to see with the time frame? What's the job description of a particular time frame? I will adjust my volume charts based on how much volume is in a market. How if things get really quiet, I will no longer continue to use a 1500 volume chart, right? Because there's less volume occurring. I drop it down to an 800 volume chart or something like that. So to me, I'm trying to keep a certain number of bars per session almost. If you think about it, that's the math. I'm trying to keep my volume bars a number of bars per session. And I'm not quantitative about that. I could be. That's just I'm not, but that's the spirit of me setting volume bars. Okay, any market commentary here? Not much. We're still in an uptrend intraday, right? We broke this little balance we were in. Here's where I was long. Here's where I came out, I believe. So before the stream, I tried once, scratched it, got back in, added, scaled out of the add, and then that's where we flattened. Pull back here. It's just not my style there for how flat this went, similar to how we went flat after the open. Delta went flat. If I'm going to use order flow to get into something, I'm going to see some type of rug pull, some type of capitulation, some type of weakness, right? We did not see super weak sellers on the way into that level. So it just wasn't an opportunity here for me to buy. If I was, again, maybe I'm dealing with a little bit of risk aversion here after yesterday. I don't think so. That's my main process goal today, is to stay aware of that all day long and make good trade decisions despite anything like that. So, I just didn't see anything good on the tape. In fact, the way the delta was behaving, the way the tape was behaving at the low of this pullback here, I kind of thought stop run. I kind of thought, let's see a little wick through that area. That probably would have gotten me involved. Again, where are we contextually? Nowhere good. Nowhere good. There's no good reason to be aggressive, to be really putting on a bunch of risk, that type of thing. I think the market is wanting to head back to test this, 18,280, we'll call it. So even from that perspective, contextually, how much risk reward is in this market as a whole to 18,280? Well, yeah, if I get a tight stop right here, I could make 3 or 4 R into that high. But what about yesterday? What risk reward was offered into that from here? A little different. So we're probably going to run these stops at the high. Sometimes I like to hunt stops. There they went. Travis, it's like the secret weapon of trading books. It's incredible. Did you get it for a decent price? I know at times we're talking like a 27-page paperback book here. I've seen it for hundreds of dollars on Amazon. Hopefully you were able to avoid that price for it. So somebody's asking about my ads yesterday in the big trade. How I was able to add at such extreme prices. What I teach is that if you're taking what we call a fast trend play, which is what that was, which is where you're really getting long, way extended above VWAP, which is typically not advised, or you're getting short while the price is extended way below VWAP, which is typically not advised. If you're going to do something like that, if you're going to get away with something like that, any students in here want to put it in the chat? What is the recipe? What is the requirement? And while I'm waiting on that, please, guys, help this new thing that NinjaTrader and myself and all the fantastic people that are a part of this, including Anthony Crudele, give us a like, give us subscribe, please. It really, we're quite frankly, I'm taking time away from my desk, away from my main trading accounts, away from a lot of things to do this, and a simple like, a simple subscribe to support this channel and what we're doing here, it really does mean a lot. So thank you guys for that. So Savas got it right, if I'm pronouncing that right, sir or ma'am. It seems like a surname. Savas says speed of tape. Speed of tape is, here's a philosophy for you guys. And this is why I love volume-based things and where are we relative to the VWAP framework. I like to think of market movement. Now, this is some interesting selling. That was some interesting lack of buying into the high where we ran the stops. I like to think of markets in terms of energy because it's fully aligned with auction market theory, the way an auction works, the sense of urgency of the crowd. Let's put on a little bit of short here. Came out of most of it. Look, it is what it is. There was a lot of buying that came in right there. I needed to start to come out. This is counter to our DVA here, but I do think we're probably running these stops. It's just unfortunate there was that spur to buying. It caused me to start to lighten up. We'll get back to talking about markets and energy here in a moment. I flattened out of it. It's at a very, as we call it, compromised trade location for a short there. And I continue to see little bursts of buying, which scare me out of the position, rightfully so. No harm, no foul. So energy, auction market theory. It takes energy to move price. It takes energy. And so if you're going to add to a position like where I added yesterday, you better have a ridiculously fast speed of tape, which is essentially the best indication of the amount of energy that's in a market at any given time. And so obviously the energy was there yesterday on that up move, and therefore I could get away with such ads. Under normal, slower conditions with less energy, you can't get away with trade locations like that because the market doesn't have enough energy to continue to expand away from VWAP. It's a pretty powerful and grounded in truth way of thinking about price movement and order flow, in my opinion. Salvadorini says, "Hi Merritt, once funded with Apteros, do you have access to you for advice on fine-tuning playbooks process? Can you talk a bit about that? If you're a trader for me, you have direct 24/7, if I'm awake, access to me. My job as the owner of a proprietary trading desk is to grow and develop and make better my traders. That is the job. That is something that I wanted when creating a prop desk. It's something I love. I love trading and I love working with my traders. All right, I'm going to put the short back on here. I'm going to be very tight and careful with it. And we'll come out of it. It's just kind of a similar to the last high, how we ran the highs, kind of capitulatory, kind of snap back in the delta, sellers piled in. See a few people asking about the delay of the stream. I wish the delay of the stream was longer. I think these sellers just got absorbed. So I'm going to quickly scratch back out of that. The sellers were pressing and not getting anything for their efforts. Once you've been on our desk for a while, you can start to hold overnight and do those things once you're on the senior desk. Tryout and junior traders do not have those permissions. I tried to lean on that passive buyer that was there, and it dropped, and so I had to come out. This is a pattern, although it's just not super clean. This is a pattern you often see where passive participant shows up, you're just pressing up against kind of the in this case, the highs, and you'll see the trapped sellers puke out and provide that little exit liquidity, if you will, which is what I was trying to take advantage of, but I got blipped out. So the guy who passed the tryout that I posted the his stats for, he's a full NADRO trader. Go check out our website for information on that. And so where most NADRO traders are having the most success right now over the past year or two is in trading multi-market versus just trading one market every single day, because they're able to go find what's the best market that's kind of in play and offering good risk reward asymmetry, good trade location contextually. It's playing this energy release that I talked about that I got scratched or stopped out of earlier. We are now pushing up into that level that I talked about that's important. 280s is really kind of where I have it. I do not like this herky-jerky volatility that just started to come in. So I just started coming out of it. I think some of the exits were profitable, some of them were losing. It just started to kind of just get squirrely, you know? You know, I don't have a strong directional bias. We are not at a, you know, ridiculously good contextual trade location. So you'll probably see me trade both ways quite a bit here today as I just scalp smaller order flow sequences, stop runs, stop hunts, things like that. I agree. We've not seen any violence here so far in the session. Kind of slow, kind of chunky, with like for a couple moves have just shaken me out because they get like, I don't know how to describe it. It's I call it squirrely, but where all of a sudden the liquidity feels loose and things start to just jump around a bit. I do not like when I see that. If I'm in a short term, just looking for a stop run kind of blip like I was doing, I have to come out of those positions. If I'm taking more of an A plus NADRO trade from a fantastic trade location, I really don't care about those little blips, right? I'll give the trade real room to work, all those kind of things. So I have different tactics that I apply for different situations, different types of playbook trades, different categories of trading, right? You manage winners differently. You manage whether or not you're going to scratch out based on short-term information differently. Everything is different about how you manage different types of trades. If I'm scalping, then order flow is very much dictating a lot of what I'm doing. If I'm taking actual really high quality narrative trades with NADRO, then order flow is at the bottom of the barrel. It's just a kind of a tiebreaker for some decisions. There's that passive buyer again. You see how much the delta is dropping and price is not. So you have a passive buyer absorbing those sellers. Yeah, you could rewind about 30 seconds and listen to what I just said there. It's, if delta is going down and price is not going down, what does that mean? That means that there is more volume being traded down into the bid. So aggressive sellers, that's what makes delta look like it's going down. And price is not going down. Why is it not going down if they're slamming the bid so hard? That's because there is a passive buyer. A passive buyer means they're just, whether it's an iceberg or just a big limit order, whatever it is, they're just sitting there on the bid, absorbing the people selling into it. That's what absorption is. Look, I'll tell you guys, there's a little absorptions that occur all over the place. There's little divergences that occur all over the place. There's little blips and all kinds of different things. Order flow is not some magic bullet that allows you to, just have X-ray vision into the market and never have another losing trade again, right? There's a tremendous amount of randomness in markets. Big players come in and need to do something, and for whatever reason they want to do it now, or they want to run a passive program or whatever. We can look at the clues that are left behind. We can do all that kind of stuff, but I like this long here after the sellers have really tried. Terrible trade location. Just a scalp. That was an execution error, so I'm just going to hop right back in. I accidentally hit my flatten button. Bit of a stall here. See if they keep pressing it. Not seeing what I want to see from buyers. But again, we know that there has been a strong passive buyer here, so I'm okay with the lack of delta. Market could be simply running away from that passive participant. Where's the violence? We do have monthly VWAP just above here. Mike, I would like to see maybe a spike into that. That would be a good spot to come out. Not good that we one-ticked the highs there and started the turn. So unfortunately, we'll just come out of that position. Well, George, the month and the quarter are the same thing. We just started a new quarter in April, so they're the same thing. That's not confluence. They're just the same data point. Great stream. Appreciate it. We're down $525. Oh, this is cookies and cream, and this is more of a heathered this tape. This wow. I was the absolute donkey right there on that. The sellers bring it into an area, they bring it into an area, looks like they're going to drop it, they do. That's the rug pull, and that was me being the sucker, and they turn it. That's how it goes sometimes. If you just look at this price action, it's pretty gnarly, right? There's no nice rotations up and down. The market has gone into full on. Well, I shouldn't do it that way. So, decent rotation here. Let's call this decent. Looks good here, and then what happens is we settle into this just choppy grind. So choppy little grinds like that are oftentimes where I'll give back some P&L, because I'm looking for something that does more like this, and all of a sudden it says, hey, we're turning, we're headed lower. No, we're going higher. Maybe I think we're turning, going lower again. No, we're just going to go higher. I think we're going to run stops through this area or something, and no this, and then that, and then there you go. It's a grind without nice momentum bar to bar. We're definitely in a, no matter how you define it, we are in an uptrend today. There's no question about that. But the nature of it is very grindy versus nice rotations and short-term tradable things for me, short-term profitable trade things for me. No, Jake, I don't size up in terms of I have a target risk, as you know, and I look to do that for my normal trading. And so it doesn't matter if all of a sudden I think it's outsized opportunity. I do not size up. I size up by responsibly adding to a position like I did yesterday, by holding more of a position. Those type things you can really kind of, in a way size up, but you don't just max out, your account when you have conviction in a trade. I do not recommend that. I recommend, no matter how excited you are about the opportunity, trying to do your job, which is first and foremost manage risk, and then, as you hear me describe it, see if we can get lucky, because you never know. There's that thing going around of that big hedge fund manager interview. I absolutely love it. The 60 Minutes interview. The guy asks him, you got to tell us, like, how you seem to be really good at predicting the future, right? The guy says, I can't see 4 inches into the future. I absolutely love that and relate to that so much. So, a real lack of buying into these highs. But what do we know about this rally or this grind move here today? We know that it's to a large degree passively driven. So, when I look at it, my inclination is to say, oh, weak buyers, I want to fade them. I want to be shorting these pops and whatnot. Well, number one, we don't have clean price action. Number two, in a passively driven day, the buyers are going to continue to look weak over and over and over and over. It doesn't necessarily mean that it is a moment where the sellers are about to tip the scales and dominate, which is more normal order flow use. So this is, so far, this is atrocious, conditions. So what I like to tell people is to wait for the market to open up. Wait for the market to open up. What does that mean? Wait for it to change its nature. Wait for it to start to give some nice rotations. Do something different than what we're currently seeing. So that's kind of where I'm at right now. Again, it's grind on small time frame, but if you look at a 30-minute chart, guys, right? We get the spike, we hold VWAP, we compress into the highs, and this is the break. To me, this is a decently important inflection around this point, the lower edge of this box, but it's big picture. So I got to see what happens around this area. Obviously, if, like yesterday, if I'm long from right here, then I can exit into that because that's a windfall type of move. Right now, it's more normal trading conditions. So this is still a technically bearish reference. Until we would to really accept, as we call it, into level and really push much further into it, then it would become a nice support reference for me. I could trade pullbacks to the long side from it. But for now, it's a target area. It's an area where the market's trying to get to. We have stacked references because we have monthly VWAP at what, like 465, So right around in here. So just above there. So to me, we have kind of these two zones the market's trying to kind of get to. Then I think we pull back. I'm not trying to predict the future. I'm not trying to tell you what's going to happen next. I'm talking about a scenario. That's all. So get into these stacked references, potentially pull back. And now we've got bull zones 17,550, right? In this area here, which is below the low of day, right? So it's quite a ways lower, but that's my contextual type of read. So what would that mean for me as a short-term trader if we do get into these stacked references and we do see rejection? start to see some excess on the profile, things like that, then I'm going to look to trade pullbacks short, and I'll actually have a really good reason to start, trading other than kind of rinky dink what we've seen so far here today. Kendrim, it would be nice if crude came back and continued to give us, a couple dollar a day ranges. That would make that market a really nice tradable day trade vehicle for us. So it'd be good to see some volatility come back and stay in crude oil. That'd be cool. Order flow change of character like now. Are we looking at the same order flow? Order flow's been dead since 908. It's currently 923. It's been absolutely dead as a doornail flatline. So again, I'll reiterate for you, that's because it's a passive buyer that's dominating this market right now. The market's heading higher. It is not being aggressively bought. There's a difference. So to me, yes, Delta is flatter than it has been. We saw a tremendous amount of buyer absorption occurring here. So it's not like we're massively absorbing anything. We're just drifting higher on the market being scared, essentially running away from a passive buyer. So nothing's changed. Yeah, Dallin, I just like cleaner moving dips, right? So for example, where did I, get long earlier? It was this nice pullback, right? I talked about potentially liking this one. It didn't. I was looking for it to just kind of run a few stops and then kind of pull the trigger. These are nice pullbacks. Have we seen one since? We have not, right? So yeah, I've nickel and dime a couple of little cheeky things, looking for little stop runs and stuff, but I've done nothing but give back the gains that I had from the initial trade. Yeah, every edge has a limit in terms of how much size it can handle. The good news about Nadro is that we're not all, because it's so frameworks based and everybody kind of customizes it to suit their individual strengths and weaknesses and personality and timeframes and markets they want to apply it to. So we don't all end up fighting for the exact same opportunities as kind of Nadro folks. So that's very important. If it wasn't that way, I never would have made a course and shared it with all the traders. So anyone who's trying to sell you an edge that's a literal just like buy here, sell here edge or system, they cannot have the right motivations for offering that to you. Big selling. Herky jerky, back and forth. Look at that, just huge seller, just absolutely slamming, and then market just drifts back up towards the highs. Probably, I always forget how long this stream is or whatnot. I think it's until 45 after. I forget. So anyways, probably the takeaway from you here today. So I guess here on the fourth stream, we're probably looking at a negative P&L for the stream. Probably the lesson is I didn't lose much because the conditions were not worth losing much. Making money in trading is actually fairly easy. Keeping it is ridiculously hard. So what I've done today is a form of kind of just keeping some P&L. I know I'm down a little bit, but I could get into a trade right now, and within 3 or 4 seconds, I could be positive on the day. That's how much I'm down on the session, right? It's kind of break even-ish. So I've done a good job here during an absolute grind fest of keeping money that I've made, yesterday and things like that. And that's the hard part of trading. That's the real hard part. Obviously, I want to come in on all these streams and show off a little and trade well and make some P&L, and I feel those things. I think just like probably anyone else does. If they say they don't feel that, they're probably not being honest with you. I think maybe some people are just really built differently than me. But yeah, there's on the more professional side of things here today, there's some lessons to take away that are not as flashy as the big winners. Okay, so an actual almost a semblance of a rotation here, almost a semblance of some downward momentum. This is great to see. This is actually the market might be opening up a bit. you know, if we run stops through this little spot here, we could stalk along. We could stalk a long trade. The highs don't look good. There's, you know, just this kind of continual one ticking of the highs. There's a buyer that just came in. But I want to see this lower. So I want to see these guys right here be taken out, right? So we're kind of in this little box right here. So if it just turns and heads higher from here, it will do so without me. But if I see some form of what we call in the scalping course a basic stop run, right? It's not rocket science. We've taken out some lows and whatnot. Then I could definitely see what that looks like at the hard right edge and potentially take it. But if they just run it from here, no thanks. Any questions about the tryout or products, just email our support team, support@apterostrading.com, and they'll help you out. I'm not much of a flashy business kind of guy. So we tend to just try to price things right the first time and not offer 90% off. So we tend to just keep it simple, price it what we feel is correct, and focus on our trading. I think it's important that personally, and I know some people are experimenting with this, and MNQ could potentially be an exception to the rule here, just based on just how much that thing trades. But I am a firm believer in when it comes to analyzing markets and then potentially trading micros, you want to analyze the main product, not the micro. It may have less transactions, but the even right, like MNQ trades like what more contracts per day than the NQ, but the MNQ would have to trade 10x more contracts per day in order to be the same amount of risk that's being put on and off each day in the market, right? Because it's a 1/10th product. So I'm a firm believer, and this goes with order flow and everything. Analyze the real market and then just go trade the micro. Don't analyze the micro, especially when it comes to order flow. Again, someone may have discovered something, and again, MNQ trades extremely actively, and I'm sure it's probably really, really close. You know, but that's my advice. Woo, we're watching paint dry here. You know what I'm shocked about? I do keep up with relative volume, and we are trading at like spot on perfect normal for the most recent whatever my stuff tells me. I forget if it's past 10 days or 20 days, whatever it is. We're trading at just like perfectly average volume. If you were to make me bet, is this above average, average, normal, or below average volume for this session, watching this tape, I would be willing to bet that it's below average. I'm actually shocked that it's just kind of almost perfectly normal. Yeah, Deep Blue, I'm not sure I fully understand your question. I saw it earlier, so I moved on because I didn't quite understand. I'm guessing you're using just baseball analogy terms. Yeah, I think it's important for most normal traders who are trading with kind of, not going for that kind of high win percent, maybe even average loser that's larger than your average winner. I do not like that style of trading. For more normal trader crowd with kind of risk reward in their favor, yeah, I think you want to get to a point where your average winning day is larger than your average losing day. I think that's a really important benchmark to get to. I struggled with it for a long time. I would have these little small winning days, and then I would have these just terrible days with all the over trading and whatnot. And my losing days were bigger than my winning days on average. So that was something I really had to work hard to get better at. I'm getting into a long here. I did see this little pullback that really couldn't do much. Let's see if we can run these highs. The mark is, as it's done so far today, the market's probably going to have some crazy, stupid blip that makes me bang out of this thing and and not work. But I'm not going to focus on the recency bias. I'm not going to be overly scared. It's, a C grade scalp here, looking for some poor highs to take out, stacked references. That monthly VWAP is looming up there higher. We're trying to get to it. Saw some weak selling. Let's see if we can resume this thing. Atrocious. Coming out of it. No selling on the tape, just going lower without any delta behind it. Even that move as I speak right there. No selling. So let's see what this does as it kind of presses the lows. We're still in that box that I drew. Right? We can just extend it to continue to remind us of what the situation is. Still would be interested if we kind of ran some stops through these. Might actually find something closer to a decent trade. This is it's kind of trading like, like rollover or something here. See if we run some stops. Whoosh. A lot of people don't realize this. Cumulative delta that you're looking at on my chart is the time and sales window. But rather than needing your eyeballs to stare at it and remember what happened, it gives you a chart, just like price. That's all it is. Big buyer just came in, totally stuffed. And then they got slammed. This time the big buyer pushed again and got through. We got the long at a good fill price. Squirrely action. Really, really bad tape. Just scratched out of it momentarily. Still kind of active in this. Wow. Just the way this big kind of just blocks of orders are coming in on this. Still stalking this thing. We'll see if they turn it from the low. But I like my decision to just stand aside right there. The sellers just continue to kind of knock on the door. So now they've blipped it lower. Continue to watch and potentially re-enter. Sellers still pressing as you see that delta heading lower. There's another one of those weird blips. This is a very, very odd tape. It's like a rollover. Kind of thing. Obviously, that passive buyer is still here. That program or whatever's going on there, absorbing a lot of this selling pressure. It's been a passively driven day so far, as we've talked about ad nauseum. All right. Popping back in the long here, little signs of life from buyers. Nope, not liking it here. So we'll stand aside again. Expect to see him press it again here. So yeah, this trade idea is over. They were not able to. There's a difference between a stop run and then something that starts to sustain outside of a little balance, and that's what's actually happening here. So that trade idea is not really valid at this point. So again, as we kind of near the end of the stream here, market made it into the area of, last week's value low, monthly VWAP. Didn't quite get the monthly VWAP on my charts. And we are starting to see a rejection from the area. There are obviously active sellers that are pressing it from here. We do have this passive buyer that this market is being dominated by, so that's a factor. But no new information here, big picture. My expectation was to get into this area, potentially that scenario that I talked about, maybe see some sellers, which we're now starting to see. I was looking for a little stop run to keep going to get that monthly VWAP level. So if we can push a little lower, then I will go into short mode and start to look to fade moves back to 18,250, 18,300, those areas to then get lower prices. Market profile, volume profile, it's very much a similar tool. I absolutely use both. They both show you where the bulk of trading has occurred and where the edges of those edge areas are. They both serve the same purpose. Market profile simplifies a lot of information. It shows you less little high volume and low volume nodes. It really does a good job of simplifying information. That can be a good thing for traders. You don't always need more complex and more levels. Most of you need simplification. But yeah, they're both great tools and they both do mostly the same thing. Very different market here than what we've seen the past couple weeks. No short-term rotations to really trade. Someone was asking me why I didn't get short. You know, it'll be me repeating some things I said, but maybe it's a good summary for as we kind of sign off the stream here. The market got into the highs and kind of fizzled out. There was no real capitulation, you know, that type thing. That never happened. It would just kind of pushed on the highs, one ticking them, and kind of very grindy and whatnot. That's a tough. I like momentum turns. I don't like mushy areas. And again, if you were to say, well, there was a real lack of buying into some of those highs based on cumulative delta, I would agree, but I would again reiterate that that's because of the passive buyer. There was more aggressive selling. You had a passive buyer absorbing all that, and that's why the delta was lower. Not so much because the buyers were super weak. There's a difference.
Merritt,
Jim,
great job, buddy.
thanks, brother. We'll take the L today, but we'll keep it in proportion to the size of the wins.
Yeah, for sure. I loved your comment about recency bias. That struck home. I run into that all the time.
I think we all do. But look, if we can be aware of it, we can make the right decisions despite the feelings or the whatever it is.
Yeah, for sure. Well, again, great. You know, it's tough. It's tough doing this in front of these people, but it's you know, I love the discussion, the commentary, the thought process. That's gold right there.
Yes, sir.
All right, man. Well, listen, thanks for being with us. You will be back not too long from now, right?
Same time, same place.
All right. That's the Dread Pirate. We're going to move right into midday markets right now. So again, thank you, Merritt.
Thanks, guys. Thanks, chat. See y'all around.
All right. We are back. We have a very special guest coming up next. The Crowded Market Report, Contrarian Market Insights. We have Jason Shapiro here with us, and we're going to bring him in right now. Jason, how are you? I'm not hearing you yet.
Can you hear me now?
Oh yeah, baby.
All right, sorry about that. My tech guy's off today.
Uh-oh. That's all right. That's all right. You look great. How you been?
Yeah, no complaints.
That's pretty good. Where are you located at, Jason?
I'm in Rhode Island.
Really? You might be the only guy I know now from Rhode Island. I've never been there. It's supposed to be nice though.
I hear that quite a bit.
So tell us a little bit about the Crowded Market Report. I follow you on Twitter now.
Crowded Market Report was something that was born out of me being in Jack Schwager's latest Market Wizards book. And then after that happened, a lot of people were contacting me. They read my chapter, they related to what I said. Could I help them? Could they work for me? Could they come make me coffee? Could whatever, you know? And while I do believe in the idea of especially I'm 57, I've been doing this since I was 22. I do believe very strongly at this point in helping people to learn, because I was helped to learn, and I was, by the people that taught me, always pressed that idea upon me. And so I was open to a lot of that, but the issue was like, I can't sit here and help, 300 people at the same time, right? I have a family and I have a business and all that, So one of those people that I gave that answer to said, well, why don't I start a web page and you can centralize it and that way we could try. And I was like, go for it. Let's see what happens, So it started off as being just a newsletter that I have written every week for myself for over 20 years. It was really my notes, my plan for the week, what I'm thinking. And it started as that, but then, obviously he added like a Discord, which I can be quite frank, I didn't know what a Discord was being in my 50s. Um, but he added a Discord, and then we started to add a lot of other things, and it's just become this whole kind of this whole animal that's been a very interesting addition to my life over the last 3 or 4 years.
Yeah, that's awesome. I have about 4 years on you, so I'm also a little bit. I didn't know what Discord was either, but we caught up fast here. And I'm going to pull up some charts here. If we could talk market structure a little bit,
Mhm.
kind of get your opinion on what's going on with some of these futures markets. I have an E-mini S&P chart up on the screen right now, and it's startling to say the least, to see that huge drawdown we saw, and then we got sticky at 5,500. How are you interpreting all of this?
You know, people came into this thing with the tariffs, I think, with the major belief. I'm a very sort of trying to read consensus type of trader, right? And trying to fade consensus type of trader. Um, People, I think, didn't believe coming into um, what is now known to as a Liberation Day. I don't think that the majority of people believed that he was going to do what he did, right? They thought that it was a negotiation tactic, and they didn't really believe that he was going to carry it through. And so they were sort of hesitant to try and short the market. And then, of course, he did what he did. And and the markets went down a lot on that, because obviously fundamentally that was bad. I find it funny how before he did that, everyone thought it was a bluff and it was a negotiation tactic, but now it's something else. Like to me, it still is a negotiation tactic. So I don't really know what's changed, other than, he kind of upped the ante a little bit. But, that's what Donald Trump has a history of doing. You read his book, Art of the Deal and all that. That's he lays it out right there. That's what he does, come in big and then negotiate down, right? So people, I think, panicked a little bit there. And I mean, what happened? We got extremely oversold by any measure. I don't trade on oversold data, but certainly by any measure, we got extremely oversold. I don't care what measure you want to use, right?
Yeah.
We got very oversold. So we're bouncing back here. I think it's interesting that we are bouncing back on the back of what has not been any kind of positive news coming out of this. We didn't really have positive news yesterday. We had China saying that they were going to up the ante. We had China come out last night and say that they were going to ride this until they die or whatever. And yet the market is bouncing back, right? So, from that sort of fundamental type of situation, there's a difference between saying that tariffs are bad 3 weeks ago and saying tariffs are bad now, because there's been an adjustment in the market, right? There's been a discounting adjustment. Everybody knows that tariffs are bad and have acted upon that, right? So, and now we're not going down anymore on the tariff news not coming out good, at least for now. We'll see what happens in the next few days or weeks, but at least for now. So to me, that's what's going on here.
Yeah, and so I mean, we're still about 900. This is an E-mini S&P daily chart on your screen. I don't know if you could see it or not.
I see it.
Yeah, I mean, we're still down like 900 points from, I'm just rounding from the highs in February, right? 2 months ago.
Sure.
And, when you see this like buying activity at what might be the lows, I don't know if they're the lows or not. Do you look at this as saying, okay, the market is settled now. We're going sideways for a while here. We have, the bottom is in kind of thing. You think the bottom is in?
I think that there's a possibility that the bottom is in. For the bottom to be in, I think we need a few things. One of them being the market being able to fight off bad tariff news. We've done that. We're doing that. Today's not over yet, clearly. But we did that yesterday and we're doing that today. That's the first thing that I think needs to happen, right? I'm a big believer that markets do not bottom on good news. They bottom on bad news. And I believe that because I have traded that. I trade market turns. That's my whole thing, right?
Okay.
So I've seen it again and again and again. Markets will bottom on bad news and they will top on good news. So we're getting the bad news and the market's not going down. So that's the first thing that has to happen. So that to this point is happening, right? Does it mean that we can't get more bad news and the market can go take out lows? No, that can happen. And if that happens, then certainly if we go through lows, you stop out of any long positions that you have, right? But as of this second, the tape is acting pretty well, all things considered. Now, is it just an oversold bounce? You know what I mean? Time will tell. It's funny that you say, is this, you didn't ask me if necessarily, well, you said, is this the bottom, but is this, are we going to be able to hold here? I don't hear anybody anymore saying we're going to new all-time highs. That's been completely thrown out of the possibilities here. And when that gets totally thrown out of the possibilities, to me, that makes the probability higher that could come, right?
And because because you take this contrarian approach, that right? That's kind of how you're looking at when you assimilate the news, the price action, the candles, and all of that stuff. It's the consensus is this. Therefore, my radar screen is up to do something maybe that's not consistent with the consensus.
Correct. And the consensus, I think, the longer you do this and the longer you're involved in this, you will find the consensus is wrong most of the time. So if the consensus is going to be wrong most of the time, then going opposite the consensus, therefore, will be right most of the time, right? But it's a question then of timing, right? Okay, here's the consensus. I feel like I have a good grip on what the consensus here is. So I know what the opposite of the consensus here, but I'm not going to just fight the tape because of that, right? I'm going to wait until the market acts in a way that, I call it market confirmation, right? But it acts in a way that could happen. And I think that certainly happened yesterday, right? We came in, the market was crashing. We were going to have the crash of 87. China was spewing a whole bunch of stuff. Trump was spewing a whole bunch of stuff. And we closed up. Why did we close up yesterday? So the consensus now scared crap. The market reacting well to bad news. That's really what I look for.
So when you say confirmation, are there certain like chart patterns or technical indicators, or how do you get that how do you get enough confirmation in your mind to place a trade?
So I think that question is a function of how you are approaching the market, right? There's all different kinds of confirmations. For me, like I say, the confirmation, I like to use what we call news failure. So everyone's bearish because of tariff news. Tariff news comes out bad. Market doesn't go down. That to me is news failure, right? And that's the confirmation that I, as a turn picker, like to use. Other people who trade other ways, can use other types of confirmation. If you're a breakout trader, well, then the confirmation should be that whatever you're trading has broken out. There's your confirmation, right? I think this is going to break out. Okay. But how's it broken out? Well, if it's broken out, then okay, there's your confirmation, right? You're a breakout trader, trade the breakout, right? And if it fails, then stop out, right? But that's how I look at confirmation based on my process and based on how I approach all this.
Totally makes sense. And then, but what happens when there's like a conflict? So in my mind, Chair Powell, was it Friday? I think it was Friday when he was speaking. He's saying he was basically hawkish, like I'm in no hurry to cut rates here. We're going to see how this all plays out. And then you look at the, you go to the CME Group's, Fed Funds Watch tool, and it's the opposite, right? It's tracking 4 rate cuts this calendar year. So there's this like, wait a second, Powell just said he's not in a hurry. Fed funds are telling us something else. Could you reconcile those things, or is that, you know what I mean? How do you reconcile that?
I'm trying to think the best way to answer that in this particular situation. I don't necessarily reconcile it. Personally, I think that people are insane if they think that he's cutting rates anytime soon. Okay, he's telling you he's not. Doesn't even make sense for him to do so. I think people are somewhat insane thinking that him cutting rates is the answer to saving the stock market. I think that's insane too, right? This gets into the macro stuff, but you need people to fund the United States debt. And if you want people to buy your debt, you don't lower interest rates, right? That makes it less people want to buy lower interest rates. People want to buy higher interest rates, right? If you're going to lend me money, do you want to lend me money at 2% or at 10%? Which one would you be more apt to lend me money at, right? So I think the idea of lowering interest rates is ridiculous to begin with. The fixed income markets, I don't think, and I've been doing this for a while, have ever done a good idea or a good job of getting it right. Just look at the last few years. They had them raising 10 times and they had them lowering 10 times. They exaggerate it, right? So I don't really trust that. People are always like, well, this is what the fixed income market's saying. And I'm like, well, when was the last time the fixed income market was right? So why would I care about what the fixed income market is saying, quite frankly, right? Again, I try to take this contrarian view to what people are thinking. I'm not a macro economist, although I did study economics and I find it fascinating. I don't trade off my macro views, right? Because that has a tendency to get me killed. I trade off of a process that I have built over time, and I have now been trading for going on 25 years, and it's worked for me. Therefore, that's what I do. People, I think, get trading confused a lot about what it is, right? Trading is about getting into situations where the risk reward is in your favor and taking a small loss when it doesn't work and riding a big gain when it does work, right? It's not about predicting the future. It's not about being smarter than everybody else, because you are not going to be able to accomplish either one of those things, right? I like to say, I'm sure that you, whoever out there, are the smartest person out there, right? But that doesn't do it, because the market is millions of people coming together at a price that they think is fair, right? So you have to be smarter than all of those people combined in order to make money doing this by being smarter. And you're not going to do that. I think we can all agree, right? So it's not about that. And the predicting the future thing is dangerous, because I'm a person who believes that Nostradamus is not real. But like Nostradamus, people have a tendency to go back and take his general words and frame them in a way so it looks like he predicted the future, right? But you cannot predict the future. Nobody to this point in the history of the world has been able to predict the future. So if you're going to play that way, that's going to be a problem for you too, right? And again, you get a lot of this faulty learning, because I think that this is going to happen, so I'm going to put on this trade. And then this does happen, and your trade maybe works. Well, now you're convincing yourself that you can actually predict the future, which is dangerous, because then when you get it wrong, inevitably, you won't admit that you are wrong, because, oh, I did it the last time. Why, this is just temporary, and this is just the market not understanding what I understand. And that's where you end up getting in a lot of trouble and having big losses, right? This game cannot be about that. That's a losing game. And like I said, I've done this for a long time. I've worked in a lot of different places, some of the pretty well-known sort of prop shops in Chicago and New York, some pretty well-known hedge funds. I've worked with hundreds of different traders and portfolio managers, many who I would consider to be very smart people, many to be who I would consider to be very well educated people. None of that ever really helped. You know, I've watched them, right? These people have analysts, 10 analysts on their team, and they're looking at this and they're looking at that, and they're talking to the companies and they're talking to the economists, and they're going out and they're doing studies and they're running statistics and they're doing this. And the number of those people that have actually added any value to the money management process or the trading process approaches zero, right? So I can tell you, based on experience, at least my experience, that that's not how you're going to do this. That's not what's going to work over time. What's going to work over time is listening to the market, right? What is the market telling you? That's what I think.
So is there in the futures world, futures trading world, do you have favorite markets that you look at and that you spend more time on?
I feel like everybody, I watch the stock market probably more than most, but the truth is I have a process that I trade across all the markets. It's the same process, one process that I trade across all markets. And then there's 37 that I trade that I consider to be liquid enough. I need US based markets because that's the only place I can get the data I need. And I need them to be liquid enough. So I have like about 37 markets that I consider to be liquid enough, and it's kind of dropped to maybe 34 or 35. So I look at it more like I'm counting cards on 35 different tables, and wherever the card count gets high enough, that's where I'm going to go play.
I
So
got it.
same process again and again and again.
So I assume you're executing in the day, right? You're trading in the day.
Most of the time, yes.
Okay. And are you carrying positions over, or are you in and out the same day trading?
No, I don't day trade. I'm a position trader. I'm picking market turns. So if I happen to catch the market turn, then I'm sitting on it until my data says, okay, that's good. It ends up being on average about 2 to 3 months that I'll hold a winning position. And clearly, if I'm picking a market turn, let's say I'm buying it and it takes out the lows, well, then I didn't get the market turn. So I get stopped out. And that usually ends up happening pretty quickly within a couple days or a week.
Okay. So you're taking a longer term point of view on this, right? So you're willing to, as long as it's going your way, you're willing just to keep it rolling, right? So you're gonna be patient even during, let's say that you're long, market's going your way, and we could use this Nasdaq as an example. You bought the turn, the market, second day in a row, we get green candles. And eventually there'll be a retracement back down, most likely to some order of magnitude, one way or the other. And you're still going to hang tight though until something tells you, hey, all right, enough is enough.
Correct. I haven't done because I'm incompetent, but I have had people work for me who have done a lot of testing on what we do. And we have never, and I'm talking about years, I had quants work for me for years. We've never found anything that gave us an edge in determining what the path of a winning trade was, right? So is it going to go straight up for 3 months? Probably not. Nothing does that, right? But are we going to get in the money for a while at first, then have a pull? We've had we've had ones that went nowhere without getting stopped for a month and then go big in our favor. We've had ones go in our favor a lot right away and just be great right off the bat. We've had ones go in our favor and then sit around for 2 months and do nothing and then go our way, right? So the path is, I have found very, very difficult to determine, so I don't fool around with it. If the trade's working, I just sit on it and let it do what it's supposed to do. Does that mean that sometimes I have trades go into money and then turn around and go back and stop me out of the loss? Yes, it does. It happens. And then we would go back and test, oh, is there anything we could have learned from that? Right? And the answer 99 times out of 100 was no. It just happens, you know. Should
Yeah.
I put a trailing stop? Should I get out, at break even? Should I move my stop up? Should I do this? We tested all of that stuff. And for my particular process, that almost all of those things took value away because it meant that we would miss out on the big trades that we need. Less than 50% of my trades end up being profitable. So I need my and I think everybody needs this, but I need my winning trades to be a lot bigger than my losing trades. If I can make $5 on a winning trade and lose $1 on a losing trade, then I can be right 30% of the time, and I can still make a lot of money. Just do that math, right? Lose lose $70, and then make, you know,
Yeah.
lose $1 70 times, make $5 30 times. You're going to lose 70, and you're going to make 150. You're going to end up being up 80, right?
Yeah.
That's what this is. So I don't, yes, the answer to your question is yes. I sit on the trade. It's not exciting, you know, but I quite frankly am not in this for excitement. And I think that's also something people have to determine when it comes to why are they doing this, right? I personally don't have the luxury of this being exciting because this is my business, right? And if I don't make money, I manage money for some institutions. And the way that I have arranged my business now is I don't take any management fee. I get a higher payout at the end than most people do because I don't take management fee. So if I don't make money, I don't make money. So like I don't have the luxury of this being fun. It's not fun. It's not fun for me. This is a business. But I understand that it is fun for some people. It's a side thing, and they want to have fun. They want some excitement, and they want to, whatever, trade around and da 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 da. And that's fine too. It's all a question of, what you are looking to get out of it. I would warn that I do some things in my life for fun, and not a single one of them makes me money. They all cost me money.
Well, so a lot of I consider myself a retail trader. I'm not a professional trader, and I think a lot of our audiences too. And there, you do get, especially if you're day trading, there's this, you get the adrenaline, you get the dopamine, you get, I don't know other the chemical warfare going on in your head, right? It's we're human beings. We get this phenomenon. And so it's kind of it's something you have to be aware of, right? And kind of push to the side, or how do you handle that?
I don't. I don't. I'm out of that. I was like that when I was younger, you know, but I don't do that. So I'm not in this for the adrenaline game, you know. I'm not in this for fun. This is a business, right? I'm in this to put food on my family's table. That's what I'm in this for. My thoughts on day trading, I think are pretty well known, but in general, I think that the statistics show that at a minimum, 95% of day traders end up losing money. So why do you even want to get into a game when at least 95% of the participants that get into that game lose money? I don't know. It's the same thing as going into a casino. 95% of the people that walk into a casino are going to lose money. Doesn't mean that a lot of people don't walk into casinos. They do. But why are they going to the casino? They're going for enjoyment, right? They're going for entertainment.
Yeah.
And that's fine.
Yeah.
If you want to do this as entertainment, then okay, but just have realistic expectations.
Yeah. No, my experience has been there's, we have a great stable of day trading guests on here that have a great way to observe the market and teach folks about the market. I'm way more optimistic about it than you are. In my experience, it's hard to be successful, right? We understand that, and so at NinjaTrader Live, we're trying to give everybody our best attempt at providing different points of view and some tools and resources to be successful. day trading, and I think it's very possible, and I think a lot of people are doing it. I was a retail futures broker for 20 years, and yeah, it was for the casual guy or gal who comes in and I'm going to trade before I go to work. And then they're not putting the time in, they're not doing the back testing, they're not doing the research and all that stuff. Yeah, they have a hard time, but we're kind of pumped up about what we're offering here on the
It's just
for the
like
date.
anything else. I think that the fact that such a small percentage of people can be successful at something like that speaks to the amount of money that can be made if you are successful at something like that. What percentage of people can make the NBA? Very small, right? But what do the people that make the NBA end up getting paid? You know, a lot, you know? So it's just like, does that mean that nobody can make the NBA? Clearly, people do make the NBA and they do get paid a lot of money for doing that because it's so difficult. So I would say the same thing about day trading. Very difficult. A very small amount of people end up being successful, but those that are can do very well.
Yeah, I'm not going to make the NBA or any I didn't get the sports gene. I don't know if you did or not. I didn't get the sports gene in my family. Everybody around me did except me.
I was a decent athlete, but I was way too slow. So speed, without speed, you're only getting so far in just about any sport, other than maybe golf. But
Yeah, but they also said that your eyesight's. I know I'm not going on a sidetrack here. We'll get back to some markets in a second. Um, your vision's important. Supposedly, the players, whether you're soccer or baseball or whatever, football, 2010 vision gives you a huge edge over everybody else.
yeah, all of the sports that I played, I wasn't any kind of kind of pro type of athlete, but I was a decent kid athlete. But all of the positions were like, I played soccer, goalie. I mean, I didn't have to run because I was slow, right? Football. Okay, I played fullback, right? And that was because I had a big fat ass and fat legs, and I had an older brother whose friend's favorite activity after school every day was to kick the crap out of me. So like nobody could hurt me on the football field. I could just put my head down and go straight and, barrel for 3 or 4 yards, right? So like all
Yeah,
the sports that I played, that was kind of where I had success, right? Which again, maybe speaks to trading as well. You have to go where your talent lies, right? You have to go where your
yeah,
mind lies. Like this is what I talk about with a lot of people is, you have to trade your way, your style, your way of thinking. You can't trade somebody else's. On my newsletter and on Crowd Market Report and all that, I do put my trades, but I beg people not to trade my stuff because it's like I should trade my stuff because this is my way
yeah,
of thinking, and you have to trade your stuff. You're not going to be
yeah,
successful trading my stuff, and I'm not going to be successful trading your stuff, quite frankly. You can learn some lessons from me. I can learn some lessons from you, and I can apply those to my trading. That's all very valuable. But to try and just copy trade other people, I think
yeah.
is a very dangerous way
Yeah.
to do this.
You mentioned maybe 37 liquid markets that you might look at. Is gold one of them?
Yes.
Yeah. What do you think is going on in gold now?
Um, I think what's going on in gold is very similar to what's going on now in just about everything, which is we've gone into a new thing, right? Um, Gold was in a very nice bull market, and maybe still is, but things started to get a little bit crowded um, in gold, and we had liquidation. People started liquidating everything. It was like, and the correlations across things, if you look the last few weeks, have just gone crazy, right? They haven't been stable at all, right? One day stocks are crashing, gold's going up because people are doing a flight to quality. The next day, stocks are crashing and gold's going down because people are selling whatever they have just to cover margin calls or whatever, right? So I think that's what's gone on in gold here. It got a little bit too crowded. And so when things started to come off, there wasn't a whole bunch of buyers left to stop it from going down like that. But just like stocks now, we have made a good adjustment here. So the odds of that going back or have increased at the very least.
I got it. Jason, are you still with me?
I am.
All
I
right, good.
see that you
I'm getting
still.
I'm getting my camera back on
Yeah, there you
track
go.
here. Here we go. We're in good shape now. Maybe. We're in good shape. You might just be I might be talking to you and you'll see like a black square, but um I'm with you here. All right, so there's this idea of like risk off kind of thing is a real thing, right? We've seen a lot of money flow, big money flow quickly once this tariff stuff happened. And when I see that and like the Swiss franc is up, yen is up, and all the other currencies are all mangled up, I have the term risk off comes to mind. Is that a term that you would talk about?
100%. Talking about it all the time. But again, based on how I approach this stuff, is what I'm looking for is the market to tell me something other than what should happen, right? So we had risk off. We know that, right? And we sort of know what is supposed to happen on risk off. Like you said, stocks come off, bonds go up, Swiss franc goes up, yen goes up, right? But what is interesting to me is that while stocks came off a lot and made new lows, the yen, where I find the most crowded positioning, um, did not do that. Yes, it went up, but it never even closed on a new high from the March highs, which is when the yen actually first started getting very crowded. So it's way underperforming um, what one would think it would do. So I'd be looking at that as a market telling me to get short yen, especially if I think that risk is going to rebound. And I think that yen is a risk off trade and therefore should go down if risk is going to rebound. Yen is where I would be looking to get short rather than long stocks or something like that. I would be looking at the yen short trade. Now that, as I say that, today is not working. Stocks are up, yen is up, right? But in general, that's how I try to approach trying to find where to put on the best trade. Which one's the most crowded? Which one is acting the worst because it's the most crowded? And let's go there.
So market correlations are important to you, right? Whether you're talking about currencies or metals or equities or treasuries.
They are, but I am pretty cognizant of the fact that they also are not very stable, you know, in particular in times like this, right? Correlations in times like this go all over the place from one day to the next, you know, so you can't rely on them that much, but I do pay a lot of attention to the correlations between markets, yes. That's what I'm spending
Yeah.
most of my time watching during the day. I'm not sitting here actively trading. But I am watching the markets all day, and what I'm watching for is sort of correlations across markets, which obviously helps me figure out what to trade, but it also helps me figure out what my portfolio risk is. You can run things like value at risk and all this stuff, but they're so late to the party by the time they figure that out that they're really of no help. I think I can do a better job of just watching and kind of getting a feel for what my risk is across different positions by watching it and observing it.
Yeah. No, that makes total sense. I do the same thing. I'm here all day looking at this quote board and half the night. I know my wife hates me, but let's kind of pivot over to the long end of the U.S. Treasury debt. We talked about it briefly earlier. And I'm looking at a 30-year Treasury bond market. The price is not the yield on a daily chart right now. And this was an interesting kind of phenomenon where we had a decent rally over 4 days above an area of resistance, and then yesterday we had an epic sell-off, almost four handles. It was a huge sell-off in the 30-year Treasury bonds, and this is the longer end of the curve, right? What is it telling us about that, if anything, the domestic and international appetite for U.S. Treasury debt?
Yeah, I mean, it's dangerous. Everybody who bought 30-year bonds since Trump's Liberation Day announcement is out of the money now. You can't say that about everybody who sold U.S. stocks. You're still in the money if you sold U.S. stocks on Liberation Day, at least for now. But certainly everybody that bought bonds is now losing money. They're trapped, and that's probably not a good thing, And again, all things being equal, I'd rather be short bonds than long stocks because of that, right? It's another way to sort of play the long stock thing is maybe the short bond, but and with the short bond thing, then you can then people are trapped, so there's a good chance they're going to have to liquidate at some point. And B, if you really get into the macro of it all, I mean, we can make the macro argument back and forth, right? But I don't think that the Fed is cutting rates anyway, and I think that's insane to think they are going to. And B, if we're really going to get into some kind of war, who the hell is funding our debt? And if no one's going to fund our debt, then 30-year bonds are in trouble, right? It could be that, or it could just be that this whole thing is going to work, what Trump is trying to do ultimately. And that if it's going to work, we are going to have an incredible economy. You can't tell me if everybody drops their tariff levels across the world to zero to each other, then we're going to have an incredible situation here, right? And maybe bonds are telling you that. It doesn't matter what they're telling you, right? What matters is that people got way too long. They're all trapped long now, and that increases the probability that bonds are going to go down. And why it ends up happening, like I say, who really cares? You know what I mean? It'll make money. Doesn't really matter. And no one's going to ask you, how you made the money. Did you make money? That's really obviously in trading, at least, all that matters.
So is it part of your process where you would look at a chart like this and say, okay, the buyers are exhausted, sellers are taking over this market. There's a lot more downside to this.
Yeah, like it would be way too late for me to try and sell something like this. I would have had to been selling that yesterday. And the idea would have been, again, contrarian. People are looking for them to cut rates. People are looking for the stock market to crash, and therefore they're buying bonds. Well, bonds went flat on the day in the morning yesterday when the Dow was still down over 1,000 points, right? It's easy to look back now and say, oh, well, the stock market rebounded all the way and the Nasdaq was up a lot, and that's why bonds were down. But the truth is, Dow ticked negative. I mean, the bonds ticked negative before 10 a.m. yesterday when the stock market was still getting crushed, right? So there is where I would be looking to take the short on, right? But look, these things can't go up. Why have they been going up? They've been going up because arguably stocks have been crashing and people are flying into this, right? Well, stocks, you walk in yesterday morning, stocks are crashing and these bonds can't get bid at all. So if that's not going to get bonds bid, then what the hell is going to get bonds bid, right? And the answer clearly was not very much, and certainly not the stock market rebounding all the way back, right? So that would be more how I approach it. I couldn't put that on now as a turn picker because my risk would be all the way back up to those highs. So the risk reward, it's 3.5, almost 4 points off those highs, right? To risk 4 points in bonds, I mean, what am I going to get on the upside, relative to that is not very good. So I couldn't do it now, but certainly, like I say, yesterday morning, and these are the kind of things that we talk about like live time in our Discord, right? We're watching these, and it's great because it's not just me watching it, got a whole bunch of people that have sort of understand some of these concepts and have grown to understand and also have their own concepts as well, right? But they're like on the Discord saying, hey, look at this, bonds are flat, what's going on? So like it's like ding, ding, ding. We have a whole bunch, for me at least, the greatest part about my Discord is all of a sudden I've got, hundreds of people that are like looking out, and I could miss something and they might catch it, right?
Yeah, no, I always thought I'm interested in your opinion on this. I've always felt that the 10-year notes and the 30-year bonds, but mostly the 10-year notes, and I use the phrase are smarter than the other markets. They seem to move in the direction sooner, the expected direction sooner than maybe the equity markets or the metals or some other markets. Does that make any sense?
You hear it a lot. I do hear that a lot. I don't know that it's true. I don't know that it's not true, right? I have a tendency to be cynical of things like that. Doesn't mean that I'm right, right? I'm cynical about everything, but it doesn't mean that I'm right. But I don't know why the bond markets would be any smarter than any other market, personally. You know what I mean? Were they smarter when they were buying the last 4 days? Was that smart? Doesn't look too smart to me, you know? Were they smarter when they were discounting in 10 interest rate cuts in 2022? Were they smarter when they were discounting in 10 interest rate rises, after that? Was that smart? I don't think that doesn't strike me as very smart, I think that they're, and again, I don't have the statistical proof to prove this, so take it for what it is, but
Yeah. Yeah.
I think that they are just as smart or dumb as every other market, personally. They get it right and wrong probably just about as much as anybody else.
Right. I appreciate that. Well, hey, thanks for spending time with me this morning. I know it was a big chunk of time and you're a busy guy.
Yeah, sure.
Crowded Market Report. You could find Jason on X, formerly known as Twitter. Reach out and say hello. And again, thanks for being with us, man.
Thanks for having me. Great talking to you.
All right. All right. All right. So we're going to move into our hot commodities segment here in about 5 seconds here with Shy. So we're going to bring Shy in when she's ready, and I'm going to show some more charts on the screen, and we're going to talk about them. There she is.
Hey, how are you doing, Jim?
Pretty good. How about you?
All right, hanging in there. Wild day. Let's dig right in. Let's start with gold today, because we're finally getting a bit of a rally in gold. Unlike yesterday's wild price action where we we got that move up and then move right back down. We're moving a little bit higher. I have off of support area around 29, let's call it 70. And though this still is a downtrend, what are you seeing in the markets? We kind of stopped at in your triangle support
Rectangle.
area. Rectangle, sorry. Why do I keep saying triangle? Something's wrong with my brain today. What do you see? What are you seeing here? I mean, I kind of like this bounce here, but definitely not completely out of the woods yet.
Yeah, no, this is a great chart. This is like my favorite chart right now. I mean, following my rectangle, we had a longer term area of resistance back here at the end of February, right? And again, it's support and resistance is not a line in the sand for me. It's a range. So you got to be a little bit of an artist here. But, I extended it over because that resistance now becomes support. And this has happened so frequently. We touched it. Right. We touched it. We closed in it. Right. We're like, all right, are we going to keep moving on, breaking on down past that 50 EMA? And then buyers brought us back up again. They brought us back up above my loosely fitting trend line here. That's that white dotted line. And we're above still that 61.8% retracement. When I see the 61.8% retracement, that's a red flag for me. That's like, all right, if we close below it and then we have a confirmation candle, this is no longer in a bullish disposition. It's in a bearish one. And so, but we didn't have that. We had that big pop up today, which was really interesting. We're just touched that 21 EMA, and now we've kind of paused. But we do have a series of lower highs, which isn't that great. And if you just dig into a intraday chart really quickly here, we have this volume profile is really let's get rid of this thing. The volume profile is really, it's a nice volume profile. It's skewed to the top. We have a really nice point of control right now. And look at this, Tracy. Every single candle, just about, except for one or two, from 1 o'clock in the morning, traded through this price point. This is price happiness right now. This market's happy being around 30.20 right now.
Yeah, I mean, it's a nice move. Seems risk on everywhere today. How long that lasts, we don't know. But I think after kind of a nice pullback in gold, we might see buyers back in this market. Let's move on to silver. Again, we
Right.
we had that. All right. Yeah. So again, we had a huge move down, right? But we kind of wicked yesterday, right? And so we're seeing a bounce pretty strong. If we can hold this $30 area, I will be very happy because I still think the fundamentals are there for the silver market, regardless of this kind of ongoing theme that we're going to have this huge recession globally and nobody's going to demand silver anymore, which is certainly not going to be the case. And with the largest deficit on record for 2025 and an even bigger one for 2026, fundamentally speaking, this market still remains a strong market. So what are your thoughts on the charts over there?
Yeah. So, I mean, to put it in perspective, I understand like the macro argument here is, hey, this is a supply and demand market, and there's true issues here. We should be trading higher. But think about, we're still at a $30, we're right at $30 right now, and that's not historically, that's a very, very high level that we rarely achieved. So we're still above that. To your point, and we did have that huge buyer's wick that yesterday is the craziest candle I've ever seen not ever seen, but one of the craziest candles I've ever seen. And then we kind of had this gap up here, and we're trading at that level right now. I'm kind of loosely fitting this older area support. We're kind of flirting with it right now. And if you kind of pull up just a regular intraday chart here, we're right at that JAX 1 level, which is not surprising that it's 30. And then the RSI is just, it's okay. It's not oversold. It's not overbought. It's kind of in the middle here. So I think right now silver's kind of taking a pause, and I don't know if tomorrow's going to be an up day or not, but so far it's kind of taking a pause. I think these lows are probably in for the day, but I could be wrong.
Yeah, I mean, we might go sideways here. We have a congestion zone on kind of the daily channel here where, between kind of 29 and 30, let's call it, it's, we've traded a lot, again, on a daily chart. So we could just stall out here and trade in between this area for a little bit before it decides what direction it wants to continue in also. Let's go to platinum. Doing a lot of metals today.
That's all right. We like it. It. So platinum is one of those they just raised. They just raised margins on it a tad bit, by the way.
Yeah, and so last time we talked about this, I said I love just under that 900 area, and we did wick down to what I have as support at 878. And bounce. And this has been kind of I have a rectangle too, so this has kind of been an area of support for a while. So for me, seeing the daily candle yesterday, with the big buyer's wick on the bottom, today stalling out a little bit, but this market kind of bounced exactly where I believe that it should have been, and it's been. So we'll have to see. I'm not convinced we're completely out of the woods yet, but again, overall, fundamentally speaking, I am still bullish on this market. A lot of that has to do with EV demand being so low in the US. They're selling more ICE vehicles. You've had a lot of car makers say that they're not really pursuing electric vehicles, particularly in the United States. We've also seen global demand down, which means demand is higher for ICE vehicles, which use a lot of platinum for catalytic converters, as well as palladium. But we'll have to see. Again, this market was susceptible to any kind of economic downturn, and that's why we did see kind of that big sell-off over the last couple of days with the other kind of industrial metals.
Yeah, I mean, I have a story to tell you before I talk about the
Okay.
charts. This weekend, this weekend, wife went out of town. My brother came to visit me. Saturday, we drove down. He bought a Tesla Y and brand new car. We drove downtown. We had a late lunch, very nice late lunch, and we had a cocktail, of course. And we drove back home, and we was like, all right, we're going to put this on autopilot, right? We're not going to touch the steering wheel. So as soon as we got out of the parking lot, it took over. The thing drove us, and we have to go over a couple of bridges, and to get to the island I live on, and it was flawless. Tracy, I was shocked. We didn't touch the steering wheel once, and it was the greatest. It was the greatest thing I've ever seen. It was wonderful. I need to get one.
All right. Well, Elon would be happy.
But I mean, just to rant on this a little bit, I know I will get to the charts in a second, everybody, but just to rant a little bit. I mean, imagine how much safer driving is now, right? Just from an accident point of view, it was unbelievable. It was all right. We'll go into the charts. I'm done with my story.
I'm glad you had a good experience. I like my gas guzzler.
I know. I'm a believer now, man. I'm a believer now. But the yesterday was a really long-legged doji in this market. We settled pretty much where we started from. Today's the same thing as a smaller-legged doji, but we're kind of like up a little bit on the day right now on a daily chart. In a small range today compared to the last, I don't know, week or so. A really small range today. And if you just kind of take a peek at an intraday chart, you could see the small range. You could see a really nice volume profile here. It's bell-shaped curve. Nice point of control right here around 918 spot one. And just a volume deficit below here. I think buyers are coming in at the bottom of the value area and just kind of pushing this back up right now. I think this is content to be where it's at right now. We'll see what happens with tariff news as it unfolds.
Correct, because reminder that the 10% tariffs globally already went into effect, and then tomorrow on top of the 10% go into effect. However, apparently they are negotiating individually with countries, so we'll find out what happens before tomorrow, if at all anything. So we're watching that, and we will keep reporting on that. And then we gotta go. We haven't done oil really in a while, so let's check out the oil market. And
Wow.
we had a nice wick yesterday. We went down into that, what it was 58.95. We're back above 60. I think this market is again a little gun shy. Obviously, tariff news isn't helping, even though this market is not subject to tariffs. Energy is not, nor are critical minerals or base metals, but it's the whole notion of we're going to have this huge global economic slowdown because of these tariffs, and that obviously would affect demand. but it's, to me, this looks for the bulls, you know, if we close green on the day today, that looks positive. At least, you know, maybe back up to that 65 area and fill in some of that volume profile on that huge drop down that we saw over the last couple days. So what's this looking like to you?
So yeah, I mean, this is again, just like every market the last couple days have been going haywire. This is one of them. But I like the fact that yesterday we had a really small body candle with some relatively big wicks at the bottom of a trend. And I love to see this. It's not quite what I would call a turnaround doji, but it's pretty close. And it's really not a perfect turnaround doji because we only have like 2 or 3 days of sell off. But that's telling me right now it's a small body candle. The dust has settled a little bit. And now buyers are starting to think about getting involved. And we're seeing a little of that today. I mean, we're trading 61 spot 62. And, you know, we're trading, you know, a 60 handle. And I think, as you pointed out, that's kind of like, you know, buyers are coming in. And when you get to that 59 handle, buyers are coming in. Anyway, all of the this is the most amazing part. All of my extension numbers, all of my fib extension numbers have been hit like to the T. And now we're kind of tracing back up here. So really, we'll see how far up we go right now. From an intraday point of view, again, a relatively small range today. We do have kind of a top skewed volume profile on the session with the point of control up at 61 spot 47. We're almost there as well. And then we have a single break out of the initial balance. And I'll at 2:30 we'll do an edgeful analysis on whether or not we're going to get a double break. Maybe we'll have a double break even before I'm done talking right now. But something's turned this around a little bit to get us back up to that top of that initial balance. Probably some kind of news rumor. Who knows? But that's it.
Well, I think it may be part of negotiations that we're talking about. So, yeah, I will. I guess I will see you again tomorrow on Hot Commodities.
All right. Well, I appreciate you, Tracy, and spending time with me right now talking about these. These are really great markets, folks. I mean, everyone focuses on micro NASDAQ, micro NASDAQ, micro NASDAQ, but there's a lot of other great futures markets to consider, and the ones that Tracy is talking about. These are some of them. So be open-minded in your trading journey.
And they have micro contracts on these too, so you can trade, you know, smaller. If you're not used to trading these markets, you can trade the smaller contracts.
Absolutely. All right, folks, we're going to go ahead and take a break. We'll be back at 2:30 with the afternoon session. Order Flow Labs guys are going to be trading. I think we had Snow and XYZ, if my memory serves me correct, trading the close. Those guys are awesome. A lot of fun, too. Highly entertaining, and they're pretty darn good traders, too. So looking forward to that. So having said all that, folks, we'll be back shortly.